Just to let everyone know, we are now recording the event.
Gabby, wait until Marcella comes up, then we'll record. Good morning, everyone. I would like to thank everyone for coming out this morning and sharing in this great informational forum. We have some really great people here that's going to provide some great discussions. But before we even get that far, I want everyone that's inside here to stand up and join me. Stand up, everyone. Online, I want you to join me also. And basically what I'm going to say here is, sometimes when we're playing sports, how many people like sports? Raise your hand. Oh, great. Okay, how many people online like sports? Throw up the thumbs up, use your emoji reactions, and throw a thumbs up if you like sports. Well, on in the football game, we have the field. Basketball teams, we have the court. Swimming, we have the pool. So I'm asking each and every one of you to join me on the court of participation this morning. Get in the game because this is what we need to engage with so that we understand how to get capital, how to remain sustainable and work together to rebuild this economy. So I'm going to ask you guys to join me on the court. Can you guys do that for me? Can we give each other a round of applause for that? Okay, now I have a few housekeeping rules. First, the exits are to my left here. In the event of emergency, everyone needs to exit the building, follow the exit signs, and take the stairs. Please do not take the elevators if it's an emergency. If it's a regular drill, you'll be instructed. There'll be people coming around to tell you which way to go. But if it's an emergency, we're going to take the stairs and we're going to get out of here very quickly and carefully. Secondly, please remember your etiquette. When someone else is speaking, you raise your hand and then prepare yourself to get either back to the microphone or Marcella, which is my colleague here, and I will pass around the mic. And then after that, online, Gabby will be the facilitator. Remember to mute your mics as you're entering the platform out of respect to other people who are speaking. Also, use your emojis, I say emojis, and also please feel free to use the chat. We want you to network, because it's all about building relationships. So with that said, we're going to move on to the next order of service. Marcella's going to come forth and she's going to give you guys an awesome welcome. So thank you all for being here. We're going to have a great day on the court and we're going to learn.
Good morning, everybody. I'm not sure about the great part, but I would like to welcome everybody to our first hybrid event and our first in-person event for 2023. Um, my name is Marcella Coverson. I am a small business specialist for OSDBU. And Javette forgot to say that there are restrooms right outside, men's room to the left, women's restroom is to the right. There's refreshments in the back should you like something. There's also masks and hand sanitizers if you'd like to take use of that. I'd like to introduce you to our OSDBU director, Mr. Calvin Mitchell. He is a great speaker, and we would like for you all to give him a round of applause. He's going to be the moderator for this event, and if you have any questions, again, raise your hand or do the hand thing on the emoji. So thank you again for coming and have a great day. And if you have any questions about anything, I'm available, Javette's available, and Samira somewhere. She's available as well. Thank you and have a good day. Calvin?
Gabby, please start the recording.
All right. Well, before we start, I definitely want to give a shout out to my team. So if you please give a round of applause to my team for putting this event together. So I'm one of those guys that I call an ideal fairy, right? So I come up with an idea and it's crazy and they just smile and grin at me, right? And yes, Calvin, we'll try, we'll figure it out. And they always deliver. So once again, I just got to thank my team. And I also want to thank my distinguished panel. You may say to yourself, well, what the heck are you doing, Calvin? This isn't your typical Ozabu type of event. And anybody who knows me knows I'm not your typical Ozabu. So we're talking about reducing barriers for small businesses. And when we talk about reducing barriers for small business, we got to think about what barriers exist, what are present, what are those stumbling blocks that we tend to see for small businesses. When you look at Executive Order 13895, it talks about various things dealing with diversity and equity and so many other things. Paragraph 5, Section B talks about how in procurement we can reduce barriers and make sure there's equity for small businesses. And so this is one way that we're going to try to do it because this is something that we don't tend to talk about. There's a somewhat an uncomfortable conversation when it comes about politics, money, and what's the other one? Religion. Yeah, see? Now, if I were online, I'll be struggling, right? Because it'd just be me and the wall. But now I have an audience, and I appreciate that. So when we're going back to this idea of equity, this is what we're trying to focus on. Because there may be people who are under the sound of my voice who are thinking about, okay, the federal government released M2203, procurement equity. And in that memo, there were 5 management actions. And the first management action was that we were going to increase our small disadvantaged business goal. Wait, there's more. From 5% to 11%. And it's going to go up even more 2025. So this year, we're looking at 12% across the federal government. So I stopped clapping because I'm like, how in the heck am I going to do this? This is how I do. This is how I'm going to increase the amount of small businesses that are able to participate. Because you guys already know I'm working hard for you internally in Ed, but we also got to make sure that we cultivate an environment where small businesses can thrive. And so if we're going to be trying to increase the aperture and open more doors, we got to make sure that the doors are easy to get through. There's a means of egress so that you guys can get through the door. So without further delay, now you know why we're here. Now I want to introduce my panel. And because I have this star-studded cast, I'm going to let them introduce themselves. But I will tell you that there's a couple folks here that were very instrumental in this whole concept of this crazy idea I had. And they sit on both sides of me. And I appreciate them being patient and kind of continuing to encourage me to do this. But I'm going to start on this side with Mr. Isaac. So Isaac, do you want to introduce yourself, tell them the company you work for, and anything that you feel is pertinent?
Yeah. Can you guys hear me? Yeah, there we go. Good morning, everyone. Thanks again, Calvin, for the invitation. He's right. I was chomping at the bits for this opportunity. I was like, man, Calvin, when are we going to do this? Or when are we going to have a, forum for small businesses, with the Department of Education? So this is a, dream come true. Thanks for having me. So my name is Isaac Ellsworth. I'm the Vice President at Republic Capital Access. And all of our small businesses are small businesses for the government. Like all of our clients are small businesses, and we specialize in financing and working capital to help them, cover payroll, generate healthy cash flow, and like you said, have the ease of access to capital. Because a lot of small businesses, they have all the capabilities lined up, but they don't have access to capital. So our financing is tailor-made for government contractors, allowing them to take on that next big contract, win that next big award, and not have that fear factor of how we're going to cover payroll, how are we going to optimize performance. So, and our motto is relationships over transactions. So I love panels like this. Like I'm excited to be a part of this. We love educating more than anything. So thanks again for having me, and look forward to the questions you guys have to ask. And please feel free to reach out in the future. Thank you again.
Sue, will you go next, please?
Sure. My name is Sue Stollers, and I'm with OPZO. The name stands for Opportunity Zone. 51% of our proceeds have to go to Opportunity Zone companies, women-owned, veteran-owned, minority-owned, so all those designations. I'm actually a 20-year career banker. I was in commercial banking with BB&T, First Citizens Bank, did 20 years of that. So I know that commercial side, wanted to do something a little bit different, and got into the fintech world. And I've been here for 5 months. And one thing I love about what we do and why I decided to get out of banking is because I wanted to help more companies that were trying to find their way. I felt like, being a banker, it's not exciting, right? Finance is like, Numbers, who wants to do that? But it was more so the mission behind helping people, seeing the community grow, seeing job creation. And that right there is what gets me up every single day. At OPZO, we take a look at financing mobilization capital. A lot of times banks, they look in the rearview mirror, meaning they want to take a look at your past performance in terms of what you have the capacity to cash flow in the future. And a lot of times you'll win a huge contract and you're like celebrating, but then you're freaking out, right? And so when you start freaking out, call me because we're going to stand behind you and give you that mobilization capital that the bank may or may not be able to provide you, so that you can hire employees and execute on the contract, meanwhile waiting for your accounts receivables to come in. So thank you for having me, and I look forward to today.
Good morning, everyone. Good morning, everyone. Sean Turner, Vice President.
Move your mic up. They can't hear you online.
Yeah, they got to hear you, Sean.
Yeah, there you go, like that.
Say it with your chest. There you
Good morning, everyone. Sean Turner, Vice President over at M&T Bank. Currently a Senior Relationship Manager, primarily focusing in the government contracting space. I currently reside up in the Columbia area, primarily focusing on the DoD space. I do have clientele in the DC, Northern Virginia areas, and we do have one of my distinguished colleagues here, Sheila Edmondson, who is, and she does sit in the DC office and is a great resource as well. So I like to look at small business and government contracting from a very unique sense. As Sue mentioned, a lot of banks look at past performance and historical performance. We like to look at contract awards and be able to scale up our level of support based on that contract award. So being a little bit more proactive with resources rather than reactive. I'm happy to be here. Always here to be a resource. We do a lot of work with SBA, and we do a lot of work with Republic Capital Access, so I know them very well. And I'm happy to know Sue as well, so I can't wait to connect after the event. Thank you, Calvin, and everyone for setting up the event, and can't wait to partake.
Calvin, thank you for the invite. My name is David Hincapie. I'm an economic development specialist in the Washington Metro Area District Office of the SBA. If you're not familiar with the SBA, there are 68 district offices. The DC Metro Area district is one of them. We covered Northern Virginia, 3 counties, Loudoun, Fairfax, Arlington, 2 counties in Maryland, that's Prince George's and Montgomery County, and then the District of Columbia. So, I am here as the SBA representative, and I'm the one who's going to tell you money is not your problem. I'm going to tell you that you prepare to get money 2 years before you get it. You're not going to get it next week. You're not going to get it next month. I like to follow the model of the drill sergeants I had. We hated them in the first 3 weeks. By the end, we loved them. I'd rather be that for you. I'm going to tell you why it's hard, why you have to work hard, why you have to learn more, why you have to do more, so that then you can go and get money from them and succeed.
One thing you will notice is by design, we have a diversity of offerings. And so we wanted to have the complexion of the financial institutions to look different, so you have a different perspective based upon where you might fall, right? There might be someone who's brand new to the federal marketplace. There may be what I call the old dogs that are around and maybe are looking to go from one place to another, right, in terms of their growth strategy. So we wanted to have a complex look at the financial industry, but I think I want to start first with this question: what sets? And I'm going to start with Sean on this one. Sean, what really, if you're going to M&T Bank, what is really the difference. At what type of client are you looking for, and why would someone go to a bank as opposed to a different type of institution?
Absolutely. So the typical client that we're typically looking for, the client that I'm typically looking for is someone who comes into a place where they have a business plan. They know the industry dynamics. They're able to identify locations for success, opportunities for success, and then also where there may be potential downfall. So planning for the worst as well. Um, my typical client is going to be well versed in um, uh, well versed in understanding what the bank typically likes to see. So banks such as M&T Bank is going to be more cash flow oriented. So we're going to be looking at the cash flow or potential cash flow of the business, um, as well as balance sheet strength. So ensuring that over the years, retention of funds has been of the utmost priority because as you invest in yourself, that entices the bank to also invest in you as well.
Sue.
Yes, our typical client has a federal government contract. They are a prime. They're somebody that may not want to have any personal guarantees. Maybe they have a low credit score. Maybe their credit score is, 580. The thing that we look at is we look at their past performance with the federal government, because if they've have good past performance and they've been continuously, to get a new contract awarded, will have had to have success in your previous contracts. And that makes sense to us, right? So we bypass a lot of the things that the banks are looking at, right? They're really kind of raking through your financials. We're just taking a look at the contract. We're going to sign your contract. In some cases, if you already have a line of credit with the bank, we'll subordinate to the bank. Or if our credit exposure is a little bit larger, it may make sense for the bank to subordinate against ours. We also have no personal guarantees, so you don't have to, sign your children and your dog and your cat to us. We're fine with just the government contracting, and then timing. Someone that's looking for money in the next 30 days, so and they just don't have time to play around. The other thing is, we're looking at people that want to, as far as do a low loan to value on their contract. So if they have a $5 million contract, we'll upfront $1 million. In multiples, so in 3 separate times. So any single client can get $3 million from us. And so we're just trying to bridge the gap that's out there, because there's a huge gap between banking, the banks, and what's available on the sub-market. And a lot of it's predatory, which is why we wanted to go in business. And I will have to say that Republic Capital is not a predatory lender, and we work together, not against each other. So they're actually the best and the lowest rate for what they do, which is a little different than what we do. So because we don't do any factoring, we just do term loans. So that's mainly the difference between, I guess, us and Republic Capital. Although they play a little bit in our world, we're very much niched to prime contractors, somebody that wants a set interest rate, and someone that just wants to go on their contract and have a backing of a finance company that believes in them.
What do you say, Isaac?
I promise y'all I didn't pay Sue to say that. I really appreciate that, Sue. But she makes a really good point. There is a gap, like when you win a contract, you get into a scramble, as a small business owner, like where do you go to get funding? And if you aren't quite bankable, for the reasons that Sean laid out, like maybe you don't have enough past performance or enough cash flow currently, but you have this contract that you just won, where do you go? So what Republic Capital Access does, we leverage your strongest asset as a small business owner, and that's your government receivable. That's the most guaranteed asset you have, because when you're billing, it's guaranteed you're going to get that payment. So what we do is we leverage that invoice that you're billing as a sub or prime contractor and advance up to 90% for prime work or 85% for sub work. So it's now allowing you to take this contract, cash flow it, and every time you bill, you have an engine in place to get the finance you need on day one. Because covering payroll is a really big problem for services. Paying your suppliers is a big problem if you're in the product realm. Like you got to pay your down payment before you bill for the product you ship. So our financing helps speed up that process and expedite your cash flow. And like Sue said, it's an affordable rate because we do an assignment of claims. And if you want to get, you can look at the government Bible, or the FAR, as I like to refer it to. It's in sub 32.8. So you would assign us the contract you want us to fund. So it's securitized. So all we're doing is advancing on the contract. And then when you get paid, it would hit our account first. And then we wire you the money the same day we get paid. So it's a really clean process that allows small businesses to have the freedom to go out and win that larger work and not have the fear of, how am I going to cover payroll? How are we going to fund this project? Because we just take that invoice and advance up to that 90% for prime and 85 for sub. So to answer the question, what type of client we look at, any small business, we're nationally covered, as a sub or prime, federal or state work. And, when you win that contract, we can get you on board within the next 2 to 3 weeks. But we advise to give us as much of a runway as you can, because we know it gets really busy when you win the contract. But, if you could be a startup and win that very first contract, and we can collateralize that and take a look. So at least give you a fighting chance to start the cash flow journey for you.
So
Calvin, can I add something to this?
Yeah.
Can I add something to this? It's just.
David, and then Javette.
Okay, so that was a whole lot of information, and in the audience, there's going to be this whole range of businesses, right? Some of you are going to be less than a year in operation. Some of you might be 7, maybe 10 years. If any of that did not make sense to you, that's your first homework assignment. That's the learning that I'm talking about. You get in touch with them and you find out what is the difference. If your revenue is less than 10 million a year, this is not something you should outsource, right? You're not yet a mogul. You're not yet that big a deal. You should know this. You got a lot of homework. You get in touch with Sean, you get in touch with Sue, you get in touch with Isaac. Get down to the nitty-gritty so that you have this memorized. You understand fully what are the range of financing options for you and your business given whatever contract you're getting. This is what I was talking about in my introduction myself. This is what I'm saying. I'm telling you, you've got a whole lot of work to do. There you go. That's what I wanted to add.
Thank you. I was actually going to come to you with a very similar question. Javette.
There are some questions online.
Right.
Gabby, you want to go ahead and facilitate those questions? And then after Gabby goes, if anyone from the audience, please line up at the mic for the question.
Yes, so we do have a question from online, and that question is subcontracting a way for a new business to gain credibility and build past performance?
Is subcontracting a way for a small business to gain credibility and past performance?
Yes,
Absolutely.
absolutely. And sometimes when you're the prime and sometimes the prime is making less than the sub. So, you get to leverage the prime for a lot of things, but a lot of times as a sub, as you're looking at your contract, you definitely need a good government contracting attorney, because there's a lot of times why the prime is picking you. And you've got to know that. And a lot of times they pick you because of your reputation on a past project. They may be picking you because there's something that your company has that their company doesn't have. So know what your value is when you walk into a contract. And sometimes I feel like subcontractors walk in feeling like they have no leverage when you actually have a lot of leverage. There's a reason why that prime wants to sub with you. But absolutely, I think it's the best way to start is to be a sub first.
I would say it's the way to start, right? Like there's no other way. So something that we've probably encountered in looking for jobs is we feel the potential employer has all the leverage, right? We're the one looking for the money. We're looking to be employed. They've got the business. But in fact, they also need you. Businesses need employees. You're all business owners. You know this. You can't do this alone. You need employees. So as a subcontractor, you have to consider that the same way. You may have not employees yet, W-2 employees. You may have contractors. You may be highly dependent on these contractors who provide you services for money. So you have to remember that these prime contractors that you want to be a subcontractor for, they're in the same boat as you are. As dependent as you are on these independent contractors for whatever you pay, the big contractors, they're dependent on the subcontractors that you want to be to execute whatever. And like she said, they're often making less money. Their margin is often smaller. They're doing it that's a different conversation for why they're doing that long term. But you have to remember, so you have to walk in there with the confidence that you have something to offer, right? You have leverage too. They need you as much as you need them. Now, there's more of you than there is of them, gives them a slight edge, but not that much.
Yeah, I couldn't agree more with David there and Sue. And because a large portion of our clients are subcontractors, because a lot of these primes, similar to the agencies, they have goals they have to reach as well. To sum up their work to small businesses. And the best approach to that is to not, go fully into only trying to win primes, like build these relationships with some of the prime contracts that you may know or run into, because they're, like you said, they're always looking for, employees to staff up. And I know there's always the situation, it's paid when paid when you're a sub, and that's always situational. If you're subbing to a prime, they pay you when they get paid. So you have to take that in mind. So it's going to be, net 30, net 45, whatever the prime's getting paid, then they pay you. So, I mean, that's just an example where a lot of our financing comes in place, because then when you invoice the prime in that example, we would be able to fund that invoice to your prime. So just thinking about how you can leverage that as hey, I have a financing engine in place where if you guys need me to come on board, we can bring the employees to you and we can cover the payroll and not always complain that we're not getting paid in time. So just things to think about when you partner, to have your finances ready to go, because they're looking for who can come on without complaining about when they're going to get paid.
Absolutely. And I'm going to try to keep this short, but outside of a sole source contract, subcontracting is the way to build up your capability statement. That allows you to demonstrate that to the government that you're able to execute on said contract. So I had a gentleman today that actually gave me his cap statement. That's an immensely important tool for actually getting to the space where you can get a prime contract. Without that, it's extremely difficult.
And so to set the stage before we move on, so every contract that's over 750,000 requires a subcontracting plan. The subcontracting plan is generally reviewed by the OZBU, and then the contracting officer essentially is the one who approves it or not approves it, right? But in that, we always are establishing goals, right? So, hey, we need to do more in the hub zone. We need to do more in the service disabled veteran-owned small business. So subcontracting is what I preach all the time, not because I don't want you to get a prime, but because I want you, while we're still looking for prime, to be making money and to making contacts. And I always say that typically it seems that subcontracting, did I just go out? Oh, no. It seems like subcontracting is a really fertile ground for small businesses because you don't have some of the bureaucracy that you have in engaging us directly. I'm being very vulnerable here. So if you think contracting stinks, imagine being a contract officer and having to print out a 100-page document that really says the same thing probably multiple times over and over again. Yeah. But I'm telling you, a lot of that back-end work that is really the administrivia that really makes, I think, direct prime contracting difficult. You kind of circumvent that in some ways, and you kind of learn through the subcontracting channel. So sometimes contractors come in and they sit before me and they say, well, Calvin, I don't want to do subcontracting. I'm going to say, hey, you know what? I don't think it's a bad thing to do both, right? Now I'm going to continue to advocate, and my team is going to continue to advocate. We're going to continue to build that past performance because in a lot of ways, our subcontractors become our prime contractors. That's kind of how the ecosystem of federal contracting works. So I'm glad we touched on that. And Javette has her hand up for another question, I'm assuming.
Really quickly, would you say that as a new business or any business, that you would recommend that they start initially building their relationship with the bank, like how they spend? We have to take a look at their portfolio. So we want to know, how do you spend? How do you reserve your dollar thresholds? Because a lot of banking institutions, they require a certain dollar threshold to do business with them.
Yeah, that's a good
What's your-
question, and I want to really pose this to the audience. I got the mic, right, so I got to kind of. So here's the thing. Do you go to the bank when you get a contract? Like, oh snap! I just won an award. Now let me go over to M&T Bank and try to get a loan. Is that how it works?
Calvin, I got 2 intense minutes on this. All right, the thing that I said, you don't get a loan tomorrow. You got the contract today, you don't get a loan tomorrow. You don't even get it next week. You get it in 18 to 24 months. And you get it by leaving this and then blowing up Sean's phone and saying, hey, can I talk to you? Or you go to whoever you're doing your business banking with and you find a lender there and you say, I have this business. I have a growth plan. This is what I've done so far, but in about 24 months, I'm going to be coming to you for some financing. I'd like to talk to you. And you sit down and you talk for 30 to 45 minutes, take them out for coffee or lunch or something. And you do that every quarter. And you tell them about your successes, you tell them about lessons learned. If you have a problem, you find your Sean. Is it Sean, have you ever lent to a business like mine? Do you have a client like mine, like me? Because I have this problem and I'm not sure. Have you ever heard of this? Can you help me out? 24 months later, after you've done this every quarter with Sean, and you walk in and you say, I want a 7A loan for $3.5 million. You're not a stranger to Sean. You may get it, you may not get it, but definitely he's going to take your call. And he may tell you, you actually don't need $3.5 million. Maybe you don't need a term loan. Maybe you need a line of credit. The point is you have a relationship and you have somebody who's an advisor as well as a source of funds. Not your only advisor, but an advisor.
I would agree with that statement. Having a proactive conversation with your bank is the most ideal situation because they understand the pipeline of information or the pipeline of contracts that you actually have en route. So, for instance, I just had a conversation with a gentleman. He's a DoD contractor. He's about 4 to 6 months out from having his FCL. We're having those initial conversations now. How many people do you plan on actually employing? What is your anticipated revenue stream? What is the dollar amount of the line of credit or the term facility that you're actually looking for, and what are you going to utilize it for? Have you heard of the SBA? You're a startup business. You've been a contractor in the space for 20 years, but this is a relatively new venture for you. SBA is something that we're going to consider for that startup company. It allows us to be more proactive by utilizing projections for that startup company that doesn't necessarily have that past performance. So it allows us to be a little bit more aggressive with the facility that we put in place.
I want to say that all things start with relationships. Okay. Bankers move around to different banks. Okay. You'll look up and that banker's gone. So you need to make a established relationship with the banker and with the bank. Okay. Those are two different things, the banker and the bank. Because when that relationship manager is gone, you want to have other people there that you ideally want to have 3 contacts at any one bank that you bank at. Just good for, I still have people that I've banked over at BB&T, US Bank. I mean, my people stay with me forever. Like all my clients are still on my phone. They still call me. I'm still introducing them to various bankers. So it's about relationships. Have you ever heard of the saying, a banker will loan you his umbrella as long as the sun is shining, but as soon as it's raining, he wants it back. So what that means is establish all the credit you need when you don't need the money. Because as soon as you need the money and your financial situation changes, it's too late. So when that banker's trying to give you that $500,000 line of credit or increase your line of credit to $1 million, take it. Even if you don't think you need it, take it, because you just don't know about the future. It's going to help you rest a little bit better knowing that you got some kind of backing. And keep in mind, these lines of credits, commercial lines are only good for 12 months unless you have an evergreen line. So understand the difference. Understand that that commercial line has a 12-month maturity. You know, look at your promissory note, make sure you know when it expires, when you need to renew it. And a lot of times I would have a check-in, you know, a quarter before it's time to renew their line, just to take a look at their financials briefly and say, hey, we need to shore up your cash position, or we need to shore up your equity position, or we need to shore up your bottom line because you want that line of credit increased or whatever it may be, or you want it to stay the same. Now, keep in mind, banks can revoke that line of credit at any time for any reason they deem. So keep that in mind as well. So I've had to shut some lines down based on industries that we no longer play in. So I've seen both sides of it. And then the other thing is appetite. All the businesses out here are different. You're different. Your business is different from your neighbor's business or another tech company or another project management company. Banks are the same way. Not all banks do government contracts. Let's just be honest. There's some banks that can't stand it, and they're just going to tell you no because you're a government contractor, because they don't understand that and they don't want to do that because they're too busy doing, other types of businesses. So make sure that the bank that you go to understands GovCon.
What constitutes the banking relationship? We're talking about building relationship. Is it based on the number of transactions, your activities, and also your personal relationship? Because you're trying to get an overall visual if the person has sustainability to pay the money back. So what is required in that question for a individual or a business owner to have? And what are some of your criteria that you look for when they're building this relationship? I heard the guy on the end, I'm sorry, I don't remember your name. You mentioned the business plan. They have to have a very strong business plan when they enter the bank. So should they, before they come to you, go to PTAC or some of our other resource partners? So can you elaborate on that just a little teeny bit, and then we're going to move to the next question.
Absolutely. So when I talk about relationship, it's more so derived of, does that person, does that bank understand your vision for your company? Can they articulate it to the people that need to know in order to get a favorable decision? That's what I ideally look at when talking about a business relationship. Additionally, there should be some interpersonal relationship as well. Does that person reach out to you because it's a Tuesday and they know you like Tuesdays? Or if for some reason they're a Ravens fan, or they're a Redskins fan, or hopefully they're not a Steelers fan, you reach out to them, and that instills that personal relationship that you can have with your banker, because ultimately that instills within them, it's just like a friendship. You're going to stand up for your friends when they're in need. And that's the type of relationship that you want from a banker.
I have a cousin who also works in the federal government, and I've stolen this thing he says. I've stolen it from him. He says, it's not who you know, it's who knows you. Do they remember you? Or are you just another person who called them up one time asking for money? That's why I was saying you get that check-in call every quarter. I guarantee you, not 2 in every 10 contractors, business owners, is going to do that. You're going to be the person they're going to remember. And if you tell them your stories, if you tell them your successes, if you tell them your problems, if you solicit advice from them, they're going to remember you. That's the personal relationship. It's not who you know, it's who knows you. By the way, because they also know other businesses, they might be able to suggest to you, have you ever thought about doing a joint venture under the SBA joint venture program? Because now you've had these quarterly check-ins, you've been doing it for a year. That's 4 of them. So after 4 of them, Sean might say, there's this other business, and it seems like you guys complement each other. Maybe you should talk. You should go out looking for a joint venture yourself. But that's what happens, not because you know Sean, but because Sean knows you. And the only way for Sean to know you is for you to have the conversation.
And I'm gonna second that, because I just had a conversation with someone, and they told me the contract name that they were going after, and they're a relatively smaller company going after a larger contract. And I knew another company that was also doing the same thing. I said, hey, do you know the name of this company? Because I realized that there is an opportunity for a teaming arrangement that can make the combination of them more competitive than one of them may have been individually. So having that relationship where you can, say, reach out and make a recommendation for a potential teaming arrangement, first I have to have a relationship with both individuals. Once you have that relationship with both individuals, they will actually then take the call and then figure out if it's an actual fit or not. It may not be a fit, but it was a connection that they can keep moving forward, because there may be another opportunity that comes down the pipeline.
Hey, before I give Isaac an opportunity, I always say, and my team says all the time, you know, the commercial space is probably really competitive, right? We probably all agree. The federal government and federal contracting isn't quite the same way. It's one of those things where when I lived in New Jersey, there was this Italian grandmother, and she always had enough food. No matter what, when I went, there was always enough food. And if you see me in person, I'm sitting down, but those who know me know that I look like I can probably eat by my size profile. She always had enough food. You know, the federal government works in the same way. There's enough food for everyone to eat, right? And to go away pretty full. If you don't look, subcontracting, even if you partner, sometimes it's good to partner with other smalls. You can partner with large too, but you know, there's a whole thing between that. But partnering with other smalls, going into things together, and really increasing the capacity is really helpful for us, right? Because when we're doing our market research and we're trying to do these set asides, hey, two is better than one sometimes, right? It makes it stronger. And there's a lot of relationships that you can have through contracting teaming arrangements. There's joint ventures that are a little more legal, if you will, or more stringent, I'll say. But the contract teaming arrangements, there's some other partnerships that you can have where you can really get together and really maximize your potential to capture some requirements. Real quick, let me get Isaac here.
Yeah, I'll just say it real quick. Appreciate everyone's, remarks about banking relationships, and you can't over communicate those things like to your financial partners. Like as much communication you have, the better. And just a good example of this is like, if they say no at the time, like it's very easy to take it personally. Oh, you don't believe in my product, you don't believe in my business plan, everything I've been working for. But you have to remember, banks, they're regulated. But like Sue said, they aren't all created equally. There are banks that are more entitled to be able to provide the finance you need for government contractors, but they're still federally regulated. They have to follow their credit underwriting. They have to bring it to their team. So, really good example, of M&T, Sean could be like, hey, Isaac, I really like this company. They're not quite ready to be bankable, but they're going to fit your model. Like they're going to fit you guys. So I'm going to refer them to you. And once they are bankable, they can graduate from our system, and then we send them back to M&T. So just knowing your routes to go, just because you have a no, it's a not yet. And to keep that relationship with Sean and say, hey, Sean, that company referred to me 6 months, a year ago? Yeah, I mean, they've grown, they've won a couple contracts. How do they look now? I was like, man, Isaac, they look great. We would love to fund all their work. They graduate from us, they go to M&T. Like that's how you work with other partners and get a solution, because it's never ending. So just don't take the no as a man, they're never gonna want to. It's just a not yet. And that's what I'll add in that equation.
So what about if a company's new, right? We talked about past performance, and maybe they don't have the past performance. What if they're new to the marketplace and they're just looking to start out? What recommendations would you give?
I would say they need a good financial partner in terms of an accountant, bookkeeper, because the financial statements tell a story. Okay, they tell the entire story. They got to know what it costs them to, they need to know down to the penny what it costs them to do what they do and how much they need, in a break even. And they need to have a budget and projections like that. You got to have a roadmap. And so that's, I guess you could saw that's something that's in the business plan. But when someone doesn't even have a budget, or they have no knowledge of what they are looking at, then it's like, I can't come up with that for you. That's got to be your vision. That's got to be something that comes from that business owner.
David, you want to?
Hey, I would add that maybe not for somebody who's brand new, but you've been around maybe a year or two, you got a little performance, the SBA Mentor Protege program. So you are the protege firm, you find a mentor firm. You got to find your own. We can't do that, right? We're not the ones, the SBA is not going to find you the mentor. But that's a way for a firm that is now too large to participate in small business contracting, to participate in small business contracting by being this mentor to your protege firm. There are strict requirements in this. There's going to be, like you were saying, the teaming arrangement and the joint ventures. The joint ventures are more formalized. It's written down on paper who's going to do what. My firm is going to do this aspect of the contract in the joint venture. Sean's firm is going to do this aspect of it. It's very formalized. Same thing in the mentor protege. The whole point of it is for the protege firm to learn. In the short term, you think that relationship is to make money. It is. In the long term, it's for you to learn from the systems and processes in place that the mentor firm uses. It's an opportunity for you to get coached. So that's another one for like a newer firm. Be the protege to some mentor firm. They're out there, they're looking for someone to be able to do this program with.
And real quick, so if you have, I'm gonna come to Javette next. If you have questions about where to start in terms of the business, who's heard of the Procurement Technical Assistance Centers? The Procurement Technical Assistance Centers are the unsung hero of the federal government. If you don't know anything about them, Google PTAC, I think it's APTAC, isn't it? APTAC and APTAC. Okay, hopefully you heard that. Probably gonna goof up that acronym. But the PTACs are a really good resource when you're starting out to just know what this landscape is gonna look like so that you even know that David is an office that can help you, right? And before you even start, right? Because it's very important that you have the foundations, right? You have the business plan, you have all these things in place. Well, how do you know? What's gonna be your strategy? Working with the PTACs, establishing a relationship. There's other organizations that can provide some assistance. And now I'm gonna, Javette?
Yes, what would you say would be the age requirement of the business? Like most banks, institutions, even credit unions say that to get your first loan, you should be in business at least 3 years and be able to show 3 years of tax revenues. So is that a true statement? Secondly, how do you see a new startup? Do you see them as a risky investment? Please expound, please.
Yeah, I can take the first stab at this. That's a great question, you know, in our industry, because we're just leveraging the contract that you've been awarded. Like you can be a startup and win your first contract, and we're able to fund that. Like we don't have to look at your past performance in our underwriting because, like, okay, this is a small business. We know they're not going to have like previous financials or previous past performance, but they just won their first contract and they need funding. So like our financing, we could provide the funding they need for a startup business. So a lot of times I just shared at a PTAC last week, and it was great because I just educated the firms like this is where you could go, like if you need immediate funding as a startup and then continue to build off of it. And they're really appreciative at that, just to know like, where do I go? Because you're right, a lot of times, you know, banks, they will look at some past performance, like immediate cash flow that you have. So we're very lenient and, you know, love working with startups for that reason on our side.
Anyone have, Sue?
Yeah, I just wanted to think of, because I agree, a lot of banks and financial institutions, 2 years is the minimum. There are some that have scoring models like B of A, Chase, they've got scoring models. If you ask for anything under 100, it's scored based on your consumer credit score. There's other untraditional means of financing to get you into business. It's not technically a business loan, but like you can borrow from your 401k, you can cash out investments, you can get a credit card with a high limit, you can do a HELOC, home equity line of credit, you can borrow from friends or family. So, or you can borrow from investment groups. So those are different ways you can get into business, not necessarily having to use a financial institute. Well, you have to use it, but more so on the consumer side. So those are just some general ideas.
And what industries do you perceive to consider risky ventures to join for as far as your banking investment portfolio? What would you consider some of those risky industries? Because like a lot of startups, they have a lot of money a lot of times because they have investors on the line. But sometimes they need an additional amount of money to back that money. So can you expound on that a little bit?
For us, it's construction. So construction. As soon as most bankers and construction, we want to run the other direction. Only because of a lot of times it's the way that the financing structure works. A lot of stuff gets eaten in construction. The margins get smaller and smaller. So For us, both, I'm talking as a recent banker as well as in finance for OPSO, we kind of stay away from construction.
Is that because they have to have a surety bond of so many dollars? Also, can you
Yes,
explain
it's a
about
little
the
bit, yeah, there's layers, and those individuals have the first rights, mechanics liens,
Yeah.
various things like that. Just, it's a nice wounding circle that we kind of have to unwind in order to do some lending.
Sean.
Absolutely. So I did want to go back to the risk again for startup companies. Typically, banks do look for 2 years of financials, et cetera. Because M&T is the #1 SBA lender in DC, Maryland, Delaware, we never even consider that because we always look at the potential of utilizing the SBA. So you're never too early to start. But there are certain things that banks look for, and you are technically, compared to a more seasoned business, looked at as riskier because it's a new space that you're entering in. Going to the construction thing, yes, construction definitely during the COVID times was high. It was yeah, it was a lot of additional risk because the cost for doing business or the cost for doing construction went from being $100 to now being $140 overnight, just because it was tough to get raw materials in from China, tough to get raw materials in from Canada, et cetera. So I would say yes, construction for sure. And then we also saw that the restaurant industry took a hit during COVID. Now, some of them were able to pivot, go to more of an online basis, but that was another industry that we had to be, or at least myself, I had to be more cautious of, ask a little bit more questions. What is their plan of action? How did they plan on being successful within a space where restaurants are largely taking a hit, the larges and the smalls?
One thing to keep in mind regarding construction is why it's riskier, right? So you can think of some businesses as being risky because less risky, even if it's a new business, because it relies on everything internal, right? So you might have some IT management company that relies on the internal ability and the knowledge of the people who work for you, who are going to do the work, the network engineers, the cybersecurity technicians. That's very internal. You hire the right person, they do the work, it's less risk. A construction company is highly dependent on stuff outside of it, outside of its control, like shipping. And if you're getting stuff from overseas or even just across the border from Mexico or from Canada, so that's where the risk comes from. So it's important for you to understand about your firm, what kind of risk it has, what kind of risk it presents, right? And to understand, I wanted to bring something up. You may all be wondering why we have these 3 kinds of lenders and why they have these different underwriting standards. If you don't know what underwriting standards means, homework assignment, go find out what that means. So why they have these different underwriting requirements, it's because of the unique ability of a bank to create money. When the bank makes a loan, it creates these dollars to give you, right? That's a right it has because it's regulated by the federal government. And in exchange for that regulation, in exchange for that right, they're regulated by the federal government, and we look at their loan portfolios and make sure that their balance sheets look pretty safe. That's what the OCC and FDIC do. Now, the other lenders, they don't have that right. They don't have that unique ability. They have to get dollars from somewhere else to have a loan fund to lend dollars. That means they have more capital at risk. That means they have to charge you more. You should understand the institutions that you're borrowing money from. You have to understand this environment in which you work. That's why there's this difference. Another unsung or little known resource, the SCORE mentors.
Yeah.
Now, you go to the SCORE mentors if you don't know what they are. Sorry if you already do, but for those who don't, these are one of the 4 SBA resource partners, partly funded by the SBA. They've been around since the 60s. SCORE used to stand for Service Corps of Retired Executives. Very few people remember that anymore. And so it's semi-retired or retired business owners. They're no good at golf, so they volunteer to mentor business owners, right? They want to do something else. So you go to the SCORE chapter, wherever you are, and you tell them what you need. I'm a federal contractor. I'm a wannabe federal contractor. I've done some subcontracting. I've been in business for 3 years. This is the kind of guidance I'm looking for. I need to make a business plan because I've been in business for 3 years. I got 3 years of tax returns. I have a growth plan. I'm not too sure. Is there a SCORE mentor there who was a federal contractor? Can I talk to them? Well, guess what? The mentoring's all free. You can talk to them as many you want. Some people have 10-year relationships with a SCORE business mentor. That's another resource you can go to in addition to the PTAC.
Dave, oh, sorry.
No, go ahead.
So I wanted to go back to what's less risky. What stuff does the bank like? In opposition to what is risky, the stuff that financial institutions in general like, I like to just narrow it down to just maybe one sentence, which is something you need a degree to do. So that's what banks like to finance. So tech companies, medical, something engineering, architecture, those are things that we love to finance. We call those professional services. We love professional services and we will finance it all day until our socks fall off, like literally. So anything you need a degree to do, you're probably going to be able to get financed because it's called barriers to entry, right? There's barriers to entry if you have to have certifications, degrees, all of those things. And so it's harder, less competition at the top, which makes it more premium for any financier.
Do we have a question in the audience?
Yes, good morning again. I'm Edith Gibson and I own.
A little closer or turn it on. Oh.
Can you hear me now?
Now we can hear you.
Okay, good, awesome. I'm Edith Gibson and I own a community action consulting firm. It's called In Communities. And I want to find out from you all if you could share some stories because one of you started to speak about, I think it was Sean, about the impact of COVID-19 where you had to ask different questions in different industries. If you could share with us or me, I'm really concerned about, I do professional services and I have multiple degrees. However, because of COVID-19, I ended up having to close my business to care for a special needs child for 2.5 years because of the education system was not providing services during COVID-19. Amongst everybody was working from home. The realities of working from home was impacted by families in mainstream on the main line. So what strategies have you worked with businesses who have multiple barriers? So you have to have a subcontract to show some more past performance because I have been in business since 2015. However, being in a position where 2.5 years, I don't have activity and banks want to see, how are you going to pay me my money back? I don't really care about X, Y, or Z. I'm sorry, but you all want your money at the end of the day. I also realized that some of the moms that I work with who also have small businesses like me, some places say, oh, go apply for a grant. Well, if you have Verizon doing grants, you're only giving out 1% of those funding. And that's not going to meet every household. That's not going to meet every small business's need in order to keep their business afloat. So what are some of the strategies that you may have worked on with some of those smaller businesses so that when they have, they're coming out of COVID and still in recovery, what can be done to kind of help them stabilize and then regrow their businesses?
So regarding the finance, I go back to the thing is, it's not who knows you. So is there a source of funding that knows you? Do you have a relationship? So that if I know you, and you've been in business since 2015, you've been banking with the bank where I work since 2015, and I know you, and I know you had to stay home for 2.5 years because you have a special needs child. I'm going to look at your business and the potential for funding different than a total stranger. Unfortunately, I don't have an answer that gives you a solution for next month, right? I go back to this thing. The relationship you build before You need the funding is what's going to be the strongest, give you a strong advantage. Now, regarding immediate needs, it may be you may have to go back to one of the smaller sources of funding, like an SBA microlender or an SBA community advantage lender. The community advantage lenders are CDFIs, Community Development Financial Institutions. They lend up to $350,000. The micro lenders are nonprofits. There's 5 in this district office area. They also operate in the Baltimore district and down in the rest of in the other part of Virginia as well. They do up to 50,000. So it could be that your circumstances make you ineligible or unqualified for anything that they offer, but the micro lender and the community advantage lender has different underwriting standards, has different underwriting processes. They look at different things. That could be an option.
Eden, did you take advantage of the SBA PPP program when this was all?
None of the EIDL or PPP were not responsive to my application. So I didn't get any of those funds during that. I know I'm not exempt because I'm in a circle of other small business owners and we have dialogue. None of us got it. And so the recommendation was to go apply for grants. And I am very familiar. One of the projects I served on in the state of Michigan, I'm very connected with CDFIs, and I understand underwriting. However, it's just even barriers to that because a lot of them are nonprofit organizations. And so they didn't know what their environment would look like. So a lot of skepticism, and like you all talked about risk, how can you mitigate that risk and show them you're not as adverse? But in that pandemic, not a lot of movement or activity was happening to be able to acquire a micro loan from Latin Economic Development Corporation. I did a lot of conversations with them way before we were in COVID-19. And then also, I know CDFIs. I traditionally bank with a credit union that's been around for 45 years, but not plugged into GovCon, which that's one of the things you mentioned earlier, Sue. A lot of institutions are not in that type of business structure where they can really understand what happens in government contracting to be able to advance a loan. So although I have a 15-year relationship from being a part of a military family with a military credit union, that's not something that was open to me. So it goes back to some of the things my grandmother said, don't put all your eggs in one basket. I should have been with MT for 15 years, you know, so, but now I'm thinking about, well, how can I and other people or families that have a small business like me, how can we be creative so that we can bounce back and really, and most of us are social impact businesses. So we've reached out collectively to Generator to see how we can get plugged into that. That's a venture capital firm. So we're looking at ways how we can be creative, but I just wanted to hear from you all, what were some of the stories that where folks came to you and they needed to recover and how you managed that and how you helped them. So thank you, David, for sharing about CDFIs and also about the micro lenders.
Thank you, Edith, too, because I think your story is not uncommon. There are a lot of women entrepreneurs, for sure, that I know have come to me and said, hey, you know, I'm probably gonna change what we're doing, or there's gonna be a different structure because of having to care for a family member. Sometimes it's elder care. The pandemic exposed a lot, and not in a good way. And so it really is good to have this question asked, and I really appreciate the sacrifices you provided for your family too. You want to field that one?
Absolutely. I did just want to, like, 30 seconds. The relationship piece is extremely important. It's never too late to start that relationship. The story, extremely important. That conveys what you want to actually tell, like an underwriter that's ultimately going to make that decision. The last piece was, there was, give me a second. The last piece, yes, we are supposed to have 2 years of financials or 2 previous years of financials. But with that story, how about we look at the 3 years prior? How about we put together projections based on your past performance when you were working? That's something that you can do. It's technically not something that the bank is looking for, but with that relationship, with that story, it's something that can be provided for potential financing.
Do we have another question online before we move forward? Okay,
Yes.
so, oh,
We actually do have some questions from online.
okay.
I'm going to ask two together because I think they're kind of related. The first one is, what's the best strategy for a startup with no experience and very little capital? And the second one is, how difficult would the availability of bridge financing be for a company that is growing but doesn't have prime contracts?
For the growing company that, it's the thing that we've been talking about this whole time. It's, you're going to go for subcontracts and you're going to attempt to build your record, your history, your past performance by doing this. There are no easy answers. Sometimes the answer we're going to give you is one you don't want to hear, which is go do the thing and then keep doing it, right? You're brand new. Okay, now the other one, with no experience and no capital, how do I put this gently?
Just,
We should have a conversation because I don't understand what you're doing. Right? I don't know anything about concrete. And if I go and I say, well, all right, I don't have any experience being a concrete contractor. I don't even know what the term is for that, right? Like, you know, the big concrete dump trucks. I don't have any experience doing that, and I don't have any money to do it. Can you give me an advice how I can go do it? I honestly don't know what to say. So let's have a conversation after this thing, and because I think there's more to the story.
Yeah, a banker would tell you to go to somebody where you can hire them. You know, maybe it's the contractor themselves that know how to do the skill, a manager. Try to find ways to mitigate the business risk in terms of getting that experience. So maybe, you know, hire someone. Maybe it's a franchise you need to go into because they train their people to do whatever it is the franchise is. So those are some ways to kind of mitigate the risk of not having the experience yourself.
I would also add, you need to pretty much, you don't need to do anything, but you should try to build your brand value first. Because once you get your brand value and have integrity around your work, you'll get more work that way. When you're brand new, a lot of times you're not going to get the traditional funding, but there are investors out there that may take a chance. But it goes back to the beginning of the conversation. You have to have a really strong business plan. So I would share that, you know, really taking a look at what you want to do, how you want to market yourself, and be it. You know, because nothing's impossible. Businesses have been doing it for years. So you can do it. You just have to have a little bit of patience and learn as you earn is what we tell our vendors here. You're going to learn and earn. So
Yeah.
that's my
I
suggestion.
love that.
Yeah, I love that. I think for every small business out there, like to know like who you are, what your business is, what you're passionate about, and your drive and your effort and your brand, that's where you can start, you know, because if people believe in you and believe in your vision, you know, that's the first step you want to go and build off of, and like building out that capability statement, because that's a huge part of your business. Like, what can you provide? And then like sell that to your relationships, to other agencies, and like, this is what we do, this is what we're planning to do. And, you know, then, you know, the rest is history after that, just building that pride and passion that you have for what you're doing and not trying to do too much, but know exactly what you can really specialize in is a good start, because it is scary to start out, but if you have the passion behind it, you can go really far.
I like to end with a uncomfortable question, or it could possibly be that. Are there unconscious bias or barriers in the industry that small businesses should be aware of, right? Because if you know that there's a barrier that exists, then you know how to address it. If there's maybe some unconscious bias or whatever that might be in the industry, once you know that it's there, then you know how to engage. Would you say that there's anything like that that's in the industry that small businesses should be aware of, so they put their best foot forward as they, would you say learn as you would
Learn and earn.
learn and earn as you learn and earn?
Yeah, I can take a quick stab at this one because we see this a lot with all of our clients being small businesses, and it's an unconscious bias, but a lot of these larger primes or agencies, not the Department of Education, they're great, but sometimes they, the unconscious bias to continue to give the same work to the businesses that have just done it before. Like you have that human instinct, like, man, this company, we've given these awards out. They've been doing great. We don't want to change it up. Same with the primes. They keep those relationships. So it's hard to break into that. But there's a trust factor. It's like, how do we know you guys can also provide the same performance that we've been having this long relationship with this small business? And that's just tough. It's an unconscious bias that you realize. But to go in and know exactly what you do and like having the most risk averse plan, because that's what these agents are looking for. Like, what's the most risk averse way we can get this job done? And if once you get in, then they're trusted. But you have to but if you also don't perform, you could never be asked again to perform for this contract. So just I've seen that a lot. A lot of it's just a trust, human instincts. Like, man, we've known this company for years. So with this like new work coming out, like how do we continue to bridge that? And it's something we'll have to think about. But just know that that's kind of in the back of their mind. Like, how is this new company going to get the job done?
And that's very important. And I want you guys to know, and I'm so glad you brought that up. I want you guys to know that the White House and the administration is very aware of this problem. It's a systemic problem in the federal contract space. And so to address that, I talked about that M2203 memo. I think it's the third management action, talks about how to get new entrants in the marketplace, right? So that is one thing that we are definitely looking at. And this is something that is definitely real, right? So part of the strategy when I tell small businesses, hey, if you want to engage with an agency, who is their incumbent? Do you have a relationship with the incumbent? Do you know who the incumbent is? What really differentiates yourself from the incumbent? Those are all things that are really important. I want to open the floor for those who actually have good knowledge on this.
Calvin said, this is potentially an uncomfortable thing because people dance around it. Okay, when we're talking about unconscious bias, we could talk about like that same vendor bias. We've been having the same vendor for 10 years and that's who we like. I don't want to do anything else. Because it's a human being, right? The human being who's making that decision is like, well, I mean, this person is reliable. This firm is reliable. It's the same thing, whoever it is. And so they're going to think, this other one can do it. All right, now here's the uncomfortable thing. The uncomfortable thing is the thing that people don't want to say out loud, so I'm just going to say it. It's racial, ethnic, and sex. That's the unconscious bias that we're all concerned about. All right? Okay, so how do you mitigate that? How do you solve that problem? Well, this is stuff that I started learning in school when you would hear the stories of people who succeeded, right? So the first PhD, black PhD economist from Harvard probably had to be 5 times better than all the other people, right? We've all heard that story. You gotta be twice as good if you're a woman. We've all heard that story. I know entrepreneurs who had to be like that. Female entrepreneurs, other entrepreneurs. In my previous job, mentored a veteran. She was in the Marines. She comes out, she goes into for a construction company, and she starts out as a receptionist, and she rises up to be a manager, project manager for them. Then she gets a degree in construction management, and then she starts her own construction company. We mentored her towards the end of that when she was just beginning it. The uncomfortable truth is she had to be so good. She had to be so good. She's in Texas, for God's sake. A bunch of macho dudes, most of them all hat, no cattle.
Hey, what's wrong with Texas, man? I'm
No,
from there.
Texas is great. Texas is great. As long if you,
What's going on?
all I'm
here?
saying is if you have the hat, you better have the cap.
What is happening?
Right, right, right. But I'm talking about the kind of dudes who are handing out contracts, and this was for commercial contracts. Sometimes it was government, state, local. And so you got some all hat, no cattle dude there going, she's a 5'7" Latina woman. What does she know about E9 construction? She named it E9 because E9 to her is a symbol of excellence. For those of you veterans in the audience, you'll know what E9 means. Sergeant Major, right? I'm telling you, she had to be so good. She had to be better. It's not right. It's not fair. It's also the world we live in.
There's 3 questions I think that every federal government contractor should ask when they start looking for new contracts. Who buys it? When do you buy it? And how do you buy it? Because you might be soliciting them when they're not ready to buy it. Or you might be talking to the wrong person. So you need to know who that person is. And then you've got to figure out how they buy it. What's their process? And really get good at that. So I kind of narrow it down to those 3 things.
When we talk about bias as it relates to any industry, one of the things that I believe that you should probably consider is just having someone that's either in power or close to power that can advocate on your behalf. If they're sitting in the room and there's a contract that comes up and they're wondering who to put on it. Oh, I know this person. I know this gentleman, and I know this ma'am who was able to do the work. I think that is incredibly important. Even within the banking industry, it's incredibly important to have a person that understands you and your vision to advocate on your behalf. I can't say it enough. So I had an instance of prior to this where one of my friends wanted to go into a financial institution and they were looking to buy some property. Well, it was ultimately declined because of location. Well, I understand what that means. There's a bias there. Well, he didn't necessarily have a relationship with the person that he went and saw. So they weren't necessarily more inclined to get that second look, to escalate, to have candid conversations about why you can't do a property that is valued at what it's supposed to be valued at. So I think you really need to put people around you that can help push you, and they have to want to be there.
Connected to what Sue and Sean are saying. So I'll share with you something that I got from a career development thing that I did for veterans when I got out of the Army. And one of the topics that they went into, we did 2 weeks, 2 consecutive weeks of sessions on this, dividing up people who you learn from into 3 categories. Now, this is not the way, this is a way, and it's useful. Coaches, mentors, and sponsors. A coach is someone you know who's going to help you with a particular skill. You want to learn your way around the acquisition Bible, right? The FAR, Federal Acquisition Regulations. So you go to the PTAC and get yourself a coach. A mentor is someone you have an ongoing relationship with from whom you learn. A sponsor is someone who will vouch for you. Someone who will put their reputation on the line for you, right? Hire Edith. Trust me, you need to hire Edith, right? And then Sean says, all right, if you say so, David, I believe you. I know I have a relationship with you, David. If you say Edith's the one, I'm gonna hire her, right? That's a sponsor. So go get yourself some sponsors.
You got anything, Isaac, before we close
How
out?
am I supposed to top that, David?
I don't know.
No, he's totally right. I love that. That's so true. Like if someone's vouching for you, that really goes a distance, and that's a value anyone can bring that type of value. Someone just building a relationship out. So
When I say this panel was incredible, it's incredible. Like, wow. I forgot I was a moderator. I'm like, I'm locked in like I'm watching a Packer game. You guys were great. And I really appreciate you being vulnerable and really discussing some of these difficult questions and helping those in the audience, and those online. Hopefully, what was said had resonated with you. Their contacts will be available, correct? Let me look at my team. Yes, the contacts will be available if you want to reach out to anyone on this panel. I think they'd be more than happy to talk to you. At this time, we're going to have a panel transition. So this panel is going to exit to my left, and then I'm going to welcome up Ms. Candace Waterman, Ms. Barbara Ash, Ms. Teresa Moon, and Mr. Ron Perry is online.
First that just was on the stage to please stand by for more questions and answers at the end. Because I would like to have a
Thank
further
you.
discussion about the biases.
Thank you.
Because I also feel that social economic groups
I know,
could be
this is good.
also a bias.
Good job, man.
So please exit quickly as we have people online waiting. Can we do that at the end, guys? We're online live. Thank you.
Sorry.
That's okay.
All right.
You got the ladies.
Got the lady.
Let's give them a round of applause. And Mr. Ron is online, so welcome.
Hey, Ron. Oh.
How are you?
Hey, Ron, how's it going?
Hanging out in Virginia Beach.
All right, good seeing you, man. All right, well, thank you guys. I'm gonna do this panel in the same way that I did the last. Again, thank you, panelists. I am really excited. I have some friends I'm surrounded by, so this should be a fun panel as well. So, Ron, we're gonna start with you. Can you introduce yourself, who you're with, and if you have a little something you may want to say before we start?
Ron Perry, National 8A Association, chimed into some of the stuff that the folks were talking about already. Absolutely can help with the financing and the teaming and the mentorship with the folks in our organization. We're going to have a teaming, partnering. It's key, especially if you're a startup. Subcontracts that was talked about earlier. Getting to know people that have been there and done that, huge deal. Glad to be here.
Miss Candace Waterman.
Good morning, everyone.
Good morning.
Good morning. Thank you for having us today. I consider Calvin and his team just such amazing forces of nature to be reckoned with and true advocates and champions for the diverse owned businesses. So thank you for all that you do for the businesses in the U.S. I'm Candace Waterman, President and CEO of Women Impacting Public Policy, more lovingly known as WIP. For those who don't know, really quickly, WIP is the leading and largest voice on Capitol Hill for the 12.9 million women-owned businesses in the country. We speak 3 languages: ACE, advocacy, community, and education, and we really ensure that we impress upon our businesses the importance of having private and public procurement pathways, if you will. So happy to be here with my fellow colleagues.
Teresa?
Thank you so much. Can you hear me? Okay,
Okay.
great. I'm Teresa Moon. I'm Director of Business Development for Parabolas. We are a veteran-operated company that provides small and growing government contractors with access to funding their growth in the federal marketplace. I'm wearing a couple of different hats today, though. I am also here to represent the HUBZone Contractors National Council. Executive Director Michelle Burnett asked me to be here on her behalf as she's traveling. So I'm super excited to be here to represent the HUBZone Council as well. I also support the National 8A Association in a lot of different events that they do, and I'm a proud member of WIP as well. So I'm excited to be a part of this conversation and grateful for you all to be here.
I literally see you everywhere, I would say.
I know, right?
Well, I appreciate that. I flew in from Orlando today, so did I get the furthest commute?
You might, yeah, I think
Other
you,
than you, Ron, maybe you did farthest commute?
Alaska.
and Miss Barbara Ash.
Well, great to be here. Thank you, Cal, and everybody at DO, Department of Education. You are all huge supporters of our work, and we want to thank you for today's opportunity to make awareness around being what we call procurement ready. And certainly access to capital is a key component of being that. And my name is Barbara Ash. I'm National Director of the Veteran Institute for Procurement, or VIP, as we like to call it. And I'm so glad you mentioned all the different ways that you engage. One thing about veterans is that they can be women-owned, HUBZone, 8A, service disabled, minority, you name it. They are all of that and more. So it's great to be here and look forward to having a conversation about how we can help businesses access the world's biggest customers successfully. Thank you for inviting us.
And so again, the focus here is how to reduce barriers. And you may notice that this panel here is diverse. It represents all the socioeconomic categories that we have within the federal government by statute. We have set-asides for each of these socioeconomic groups. So we wanted to bring them on stage and give them a perspective from the industry perspective, right? So from an industry body perspective. So we talked about relationships. And I'm gonna start with you, Candace. From your vantage point, one, how important are these relationships? And what are you telling your constituents and that are women-owned small businesses about the value of relationships?
So I think first and foremost, there are two things that are super important: time and relationships, right? Those, in my own humble opinion, are two of the most important things in life and in your ecosystem. You're not going to get more time than what you're given. And every relationship you have actually encourages you, inspires you, or you inspire someone else by those relationships. So as you look to build relationships, particularly in business, this is a small but large network. Our panel earlier said they work together.
Right.
Barbara just gave a great example of veterans cross all those classes, women cross all of those. If I have a business that I am dealing with, let's just say it's Edith's business, right? I'm like, oh my God, Barbara, you need to get her involved with your organization. So we do business with people we know and trust and like. Let's say that, I'm being honest, right? About that. But the relationships you build, you don't realize it allows you to go up the rung or either depth wise, right? Further into what you're doing. So the relationship is extremely important, not just with business to organizations like us, but business to business and business to agencies and corporate partners. So it's a total ecosystem. And so you have to have that. The other I will say is from a certification standpoint or socioeconomic class, wherever you fit, if you are a woman, if you're a minority, if you're a veteran, whatever tool you can have to separate yourself or enhance your business, you need to do that, because then that's going to, again, spread your relationship net wider. Because Teresa is a great example too. She is at HUBZone, she is at 8A, she is at WIP. She literally, that if you're going to any of these government contracting, either education events, conferences, I know I'm going to see Teresa. And not only am I going to see her, she's going to bring value wherever she shows up. And that I only know that because of the relationship I have with her. So I would say, again, relationships and time, utmost importance.
Thank you, my friend. I appreciate that very much. When I'm speaking to a small business leader, I always encourage them to reach out to the point of the last conversation when we talked about mentorship. Find someone that's in your lane, that's walked that path before you, and ask them what it was like. Having someone within your industry that understands the struggles that you're going through, can share with you the lessons that they've learned through the challenges and the struggles that they've had. So you can learn the lessons through them. You don't need to make the same mistake twice, even if it wasn't your mistake to begin with, right? So you learn and grow from the experiences of people who go before you. And I find it very encouraging when business leaders step out of their comfort zone and share what it was like to get through what your experience was, how to get from the beginning to the end goal. But you've got to know what that looks like. You have to build a plan. But if you can ask from experience from someone else, what did your plan look like? I always say, I love to be told, tell me what to do in the beginning. Tell me what to do. And once I know what I'm doing, then I can make it my own. So rather than try to reinvent the wheel and create a path that's rogue, even though that's great, and we all like to stand out, sometimes it isn't necessary to walk a path alone, but stand shoulder to shoulder with people who have done it first and learn from them. And then you make it your own and craft it into something that's unique to you, that differentiator. But you don't have to be a lone man soldier on that walk, because a lot of people have struggled like you have and have succeeded. So find out what they did and learn from them and grow.
So want to put in a plug. We've been starting conversations with Cal and look forward to continuing that. But that's exactly what we do. We're talking about the journey of the small business in federal contracting, the pitfalls, the success, because that is you'll be surprised. It's not hard for me to get people to come and speak. People are like really wanting to share the experience and really engage. So thank you, Barbara.
Oh, thank you. And again, thank you. There's no new in business. How we do it is new, what tools we use, but really there's no new in business. And it's not just because I've been doing this for 30 plus years, but getting back to relationships, the woman in the audience mentioned some of the challenges, with accessing. This was a difficult time coming out, during COVID. When you're new, how do you build relationships when we're all, in our bubbles? We all had our bubbles, right? To protect ourselves and our families if we could. And so, that's if we're talking about the value of relationships, then that was a real hit for businesses that were at the cusp or needing to build those relationships. It was hard. All of us that really thrived or survived, I think, depended on what we call the Rolodex, or basically our network of people that we had on our phones, right? Who was on your cell phone, what number, who could you call? And so getting back out there and building those bridges. I'm so glad the folks are here today that made the effort to come out in person, because it is so important to start building those relationships, because those are very much a key to your success. I also would say that we started today talking about sports, and I think that's always a great analogy when it comes to business, because it is a competition at a number of levels, and how you win, whether it's winning a procurement or a commercial award, it does depend on your relationship with coaches, as you mentioned, Teresa. And so you think about, let's just take football, because we're in that season. Yeah, we can talk about, but all sports, professional sports. And if you're in business, you're in the professional side of sports, right? When we started out as perhaps in youth, you've got a parent that is the subject matter expert that is volunteering what they know in their time. As you move up that food chain in terms of competition, what goes up? You still have players, same as number of players on the field. What changed off the field? The coaches, right? Is it the best person that wins? The team that has the best players? Not always. They might spend a lot of money for that best player. It's the whole package. It's the same thing in business. Think about your team beyond just the internal team, right? You got to have the good players. You can't win the best advisors or coaches without having a good team, but you can't also win with the best players. So you pay all this money for all this great talent. Got to have talent. But what are your advisors, your coaches, those relationships that are going to give you the edge? Think about that. So as you go into the professional team, they'll have a specialist, a coach that just does for special teams.
Mhm.
One for the quarterback.
Right.
There's only one quarterback, but they have a bench of quarterbacks, but the quarterback, the kicking, offense, defense, special teams. I don't know, goes on and on. There's a reason. So it's the total package. So what's your total package as a business? Who are your advisors? Choose them wisely. That is going to be, it is so competitive. And on sports, in the Olympics, they give 3 prizes, and at the Department of Education, there's 1 winner.
That's one way.
At DOD, there's 1 winner, and so it's that competitive. So as a small business, your advantage is not only your internal team, which is important, but your external team of coaches. And we all alluded to that. And how you find those coaches is exactly how it was mentioned here. We have a number of business owners here. There's some online, I know. Start asking the ones that you admire that have done well. Ask them who their advisors are. Who is their banker? That's very important. Who's your accountant? Who does your payroll? Those are all the teams you have to start building, and ask them. And will they, to the point of be your advocate, as David mentioned, will they say, let me introduce you? Can I make that connection for you? So relationships are key, and think about relationships in terms of building a winning team. Thank you.
Thank you. Ron.
Yeah, I'm going to echo all those same things. I'm going to take it one step further, going with Candace from earlier. So statistically proven, you will work with somebody that you know and dislike before you'll work with somebody you don't know. Statistically proven. So it's the network thing, and it does help to work with people that you do like, and you should pick people that you do like. But if you're going to be in a situation where you're going to go after a project and somebody, you know what, they've got some weird habits, or they're just odd to work with, or they're abrasive, but they do good work, you'll work with them before you'll work with somebody you don't know. So the marketing, the teaming piece of it, the whole thing dovetails together. There was a question that just came across the chat from a new 8A company. How do you best get started if you don't have any contracts? You subcontract. You meet other partners. You use the 8A similarly situated rule, which allows you to partner with another 8A. Everybody started from someplace. So, and everybody who does this as small businesses is sympathetic to other small businesses. Plain and simple, we all started as one person. And then those that got lucky and grew, they didn't do it by themselves. I guarantee you they didn't do it by themselves. They had friends, they had family, they had partners. And a lot of these folks will reach back. And then you're going to knock on a lot of doors, and some of these people aren't going to be receptive. Don't waste your time with those people. Find the ones that are receptive. You can see their body language. Those of you that are in the room there, if you don't leave that room getting everybody's business card out of that room, you haven't helped yourself at all. You need to reach out to everybody in there, even if they don't have any value as of right now, because they don't have value as of this moment, but they'll have value tomorrow. Maybe next week, maybe next month, maybe 2 years from now. I can't tell you how many people come back and state, hey, the advice you gave me 10 years ago made me successful. And then they reach back into their network and they make it happen. So it's one of those things, the teaming, the networking, be open and receptive and listen. It's one of those deals where you have no idea who's sitting next to you or behind you or in front of you, and you're not going to know until you reach out. Don't be shy. This is not, if you're there for a reason. You're there to enhance your abilities. You're there to increase the revenues for yourself and your families and the organizations you represent. If you want to make friends, go to the gym or go to church. Today is not the day.
So, amen, Ron. So here's another thing too. So Ron's right. So put your information in the chat. And if you're here, I guess you would exchange LinkedIn or get a card. So make sure you get a card and coffee and a donut. And if you're online, unfortunately, the spider donuts are all taken up. So the next question that I have is, so what advice do you give in terms of like not financial responsibility, but in terms of finance, starting a business, what advice do you provide to your constituents, Candace?
So a couple of things. The first is CEO does not mean chief everything officer.
Ooh.
Stay in your lane and work your lane. Your lane. And if you need something that's not in your lane of expertise, seek the expert in that space. We just had a panel of experts. I know enough financially to be super dangerous, but then I need to go ask someone else, right? So, and don't be afraid. Sometimes as businesses, startups, or even experience, startups, you're afraid to ask the questions, or more often than not, you're afraid you can't afford the expertise of someone else, right? Because you're a startup and, oh, I don't have money. They're absolutely financial. So your banker, your accountant, and your attorney. And I say have two attorneys to make sure the first one is doing what they're supposed to do. No disrespect to any attorneys here in the room, but ensure that you are asking the questions of the experts that you need, and don't try to guess. I can't tell you how many people say, oh my goodness, I wish I would have done that earlier in my pathway. I wish I would have enlisted this person's expertise earlier in the pathway. So don't be afraid to ask for help. Don't be afraid to say what you don't know, because all of us have an area that we just don't know about. That's why you have an expert in that space, so that you can go seek them out. So especially from a financial perspective, because we know access to capital, particularly for women, is a barrier to entry and to growth. So you're going to hit it both sides. So if you get it, and when you're entering, oh great, I have it. Now I'm going to the next level and I'm still going to have that barrier again. So start that relationship early on. Don't be afraid to look at non-traditional means of financing and asking questions from that perspective, because that is what you're going to need at every growth point of your business.
And I think it's important because the one thing that was fascinating is like before you guys got here, like the bankers, they were chest bumping, they were high fiving, right? They knew each other, right? And I think it was fascinating because they were saying, hey, I would go and speak to so and kind of reference and to kind of make that connection, because you don't know what you don't know. But until you put yourself out there, that's only when you can really start your journey. I appreciate that.
I would say, and to Candace's point as well, you need to start with a plan. And that plan needs to include, what are you going to look like in 5, 10, 15 years? To the question that was posed from online participant, I'm just getting started, I don't have any capital, and I have very little experience. Start with your plan. Start building a plan of what it looks like, and start with the end in mind. Where do you want to end up? Because if you don't think of that soon enough, there's no way for you to target where you want to be and project benchmarks along the way, so you can see where your success has been, where your challenges have been, and how you can re-equip yourself with ways to pivot and do things differently if you need to. Because a lot of what you're doing is you're a subject matter expert, and you need to build a team of external support services around you that support you in the same way that your internal employees do. I have a mentor that says your external partners should be seen as your external employees. They work for you, and they should have the same goals for you as you have for yourself. So surround yourself with support services that understand what your goal is and where they can help get you to that goal. And they, first and foremost, should have a great knowledge of government contracting. If you are looking for a financial partner that doesn't understand the ebb and flow of the federal market, they're not going to be a good partner for you, because they're not going to understand when there's a stall on a contract opportunity, or when you are expecting your award to come out next week and it comes out next month. They're not going to understand about the ramp up period prior to invoice. What are you going to do before you've got an invoice to utilize to pull cash forward? You need to have some plans in place. So making sure that you have financial partners and external partners that understand government contracting is key, because then they'll be able to help you grow when you need to in the amount of time that you need to, because the process is different than it is in the commercial market, right? You can go from a $10,000 contract to $1 million contract in 6 months. It's possible. You can go from a subcontract to a prime quickly, but having a plan in place with support services around you that understand your journey and understand the way government contracting ebbs and flows is key.
And Barbara, you train so many veterans, right? So I will tell you, if you don't know about VIP, please Google VIP, Google what they do. She's going to talk a little bit about that. But when I see the little VIP pin on the lapel of a person, I know they know what they're talking about. And I know they've gotten really good training. And a lot of my Azabu colleagues, we talk all the time. That's like a badge of honor in some ways, right? Because if I see that, I know you went through a very rigorous program. So could you talk about it a little bit?
Oh, thank you. And thank you for that. And, and I want to thank you for your support too of coming out to VIP. In a course of those 3 days of training, we'll have 36 to 38 instructors, Calvin being one of them, that comes out and gives back his time to the veteran small businesses that are looking to enter and scale in the federal marketplace. So just a little bit about VIP. We accelerate the success of veteran-owned and service-disabled veteran-owned small businesses in the government contracting marketplace. We do that at no cost to veterans nationwide, and they apply online on a first-come, first-served basis. We pick up the hotel, meals, and the training at no cost. It takes place 3 days in person at the Bolger Center, which is a federal facility just outside of Washington, D.C. They just have to get here. We do it across 5 curriculums. So we have for the company that is just wanting to enter the federal government, we have that. You'd only have to be in business 1 year. And then those that are already doing government contracting, either as a sub or a prime, have had a little bit of success, now want to scale. We have VIP Grow. For those that are now at 10 million, well, first of all, I hate to tell those, when you get to 10 million, you still have challenges, believe it or not. They're just different, right? Right. And so we help you get to that next level of sustained growth. And then we have VIP International. What happens oftentimes, the U.S. government is not only large, but it's global. And if the customer loves you and they have a need outside the United States, OCONUS, they still have that need, whether or not you do it or your potential competitor does it. So you have a choice to make, but it's a tricky choice, a very risky choice if you don't know what you're doing when you go overseas, OCONUS, in terms of compliance and mitigating those risks. We have VIP International, and then we also have VIP Aerospace to help connect companies to that growing sector, which is has its unique challenges based on its requirements to enter and scale. So those are the curriculums, and what we do in the classroom is really what we've been talking about here today, is mitigating risks and helping you to compete, comply, and perform. And consistently do that, right? That's something we haven't talked about much here, but the government, as you can imagine, wants to make sure that what you did over there, you can do here, and you can do it again and again and again consistently, which goes to your ability to access capital, and a big part of being procurement ready is being able to finance it. Are you ready to perform on day one, right? Do you know the rules, right? Are you going to be able to scale? Are you going to be able to do the reporting that is required? These are taxpayer dollars. So what we focus on in the classroom is the operation and program controls, a lot on accounting, know your numbers, right? You heard the bankers talk about it. You're going to have know your numbers when it comes to cash flow, as well as, your accounts receivable. You'll have to know what your indirect rates are. A lot of just knowing your financials. And also, do you know every time you bill an hour of labor, are you making any money?
Mm.
You'd be shocked how many people don't know that answer,
Wow.
right? And so we focus on making sure that the businesses understand CPARs and other terms in the federal government that matter if it's a space you want to enter. And, you know, they're in a room with 49 other CEOs. So we talked about building those relationships, those informal mentorships. So it's a relationship building with not only the instructors, that can be your advocates, your mentors, your coaches, but also the other CEOs in the room. So we are, we train 250 companies a year across those 5 curriculums. We have 2,000 graduates, and they have won 17 billion in Prime Awards. So it works, and I encourage you to apply if you're interested in attending. And we always say, if you can't be a VIP, partner with one. If you can't be a veteran, partner with one.
Yeah, there you go.
So thank you for allowing me to share a little bit about P. Appreciate that.
No problem.
Everything that's been said here today from the panelists and from Ron is absolutely true. So please take this advice to heart. It'll serve you well, and be a lifelong learner. Every successful CEO is a lifelong learner in their journey.
Hey, Ron, you have anything to add?
It's hard to follow up on that one, right?
I know.
And I'll tell you what. So, well, like I said, the continuing the learning, the partnering with everybody in the groups, as an example, that are 8A certified. The last conference that we had, 50% of the people in the room were veterans. 50%.
Woo.
So, when you get those, get those certifications, get your HubZone, get your 8A, get your DBE, partner with one. You may qualify to be a HubZone, you may qualify to be an 8A company, but do your homework before you get started. The 8A program is a 9-year program. Statistically proven, 50% of all 8As will never get an 8A contract. Of those that get them, it takes 2.5 years to get your first 8A contract. So, make sure that you're ready when you get started. Talk to existing 8A companies. Hey, what were your experiences? HubZone, totally different animal, and all its rules have changed recently here in the last couple of years. You're in the program today, you might be out of the program tomorrow. Lots of places that like to see, I'm 8A, I'm HubZone, I'm women-owned, I'm veteran, I have a top secret security clearance. I mean, damn, that's a unicorn, right? And so this is one of those things where you want to be prepared for all that, and you want to partner with those folks. I mean, there's missions that are here. The folks that are doing these, the entrepreneurs are the first ones to get up, the last ones to go to bed. We get paid less than everybody else, and we love what we do. So we are a weird group of people, but we love what we do. So since the last time we spoke, I've had 3 people in the last 15 minutes do LinkedIn requests to get together in the last 15 minutes. So that it works, and we'll answer those questions. So make sure that everybody there, everybody should be getting these same requests from everybody that's on this panel, because you got some knowledge there, you got some passion there. These are the people that can help direct you. Now, they're not going to give you buckets of money, and if anybody's giving away buckets of money, my hand's raised, I'll take a bucket of money. But make sure you do, listen to this advice. This advice is good advice, and reach out. Don't leave this event, either virtually or physically, out of that room without making sure you reach out. It's on you. We're here to tell you this works. And if you don't take advantage of it, that's on you.
So let me take this time to pause. And Gabby, do we have any questions online before I go any further? I should have prepped her beforehand.
Should we share some of the online questions?
Sure.
So, honestly, if anyone has any additional tips for businesses that are just starting or that don't have any contract experience, we're looking to get as much insight into that as possible. I think we have a number of audience members that are just starting out. So if there's any other information on that, that'd be really helpful.
All right. Yeah, let's start.
Yeah, can I
Okay.
just say, jump in? Yeah, go to your, SBA. Every town city should be able to, just go online, sba.gov, and find your SBA office and start building those relationships. If you're a veteran, start with your Veteran Business Outreach Center, your VBOC for short. But we always like to say at VIP, and I'm sure everybody would agree here on the panel, align yourself with who cares when you win besides your mom, right? Who's going to look out for you? And SBA, that's all they do is help small businesses every day. And they're going to connect you to what resources are right there that are available to you. I would also say that your Procurement Technical Assistance Center should be able to get you, registered and help you get registered in SAM, which is a requirement. Help determine your NACE codes, which is a term that basically aligns what your company does to what the government, classifies of what it buys, and start learning. Align yourself with an association. There's, we hear Ron, National 8A, if that's something that would align, even if you're not in 8A yet, a lot of great information. Women impacting public policy. A lot of great information on contracting. You're going to have to start being a learner. So there are a lot of resources out there that most are free, and you need to align yourself with those resources. Do not go it alone, as Teresa said here. Do not go it alone.
I'll give a quick plug because you said WIP. WIP has a program called Challenge Her. I don't know if anyone who has ever heard it or has attended.
Get a child. Everybody heard of Challenge Her? Okay.
It is really one of the most sought after programs across the country for government contractors. We have 2 tracks, Emerging and Experienced. It is free. We have an online library. We also do in-person events. So for those startups, challengeher.org, or you can go to whip.org and you can find Challenge Her. We have a litany of on-demand videos, so you can do it right from your home. We do monthly webinars that are live, and then we're in person across the country. I would say to align yourselves, as you said, Barbara, with your chamber, with your trade organization. And so that way can be a sponge and get that information. And then I'll say these 3 about know your industry better than anyone else. You started your business for a reason, but understand and know your industry. Know where you fit into the supply chain. Not everyone is a candidate to do business direct with an agency or the government. Sometimes subcontracting is your niche because of what service or product you provide. So understand your supply chain and your industry and where you fit into your supply chain. It will cut out so much frustration for you. And then get to know your competitors, right? Other people in the industry who are doing work that you are doing, because not every 2 people do the same thing the same way. And so understand and get to know, I call them competitors, because I don't know that the word competition is because of the way of the world now is the same definition. Because Teresa and I may provide the same service or product, but I don't do it exactly like her. Or guess what? She may have a contract and her folks who would do what I provide are tied up. So now she does need to do some outsourcing. So get to know those folks in your industry.
Even Lockheed and Northrop, team up.
Absolutely.
Yeah.
Yeah.
Hold on, I didn't want to go over the moon. So Teresa, you go.
I love it. Thank you. I appreciate that. Pun intended. And to Candace's point, I think I tell people often, just because you're the best at what you do doesn't equate to success in the federal marketplace. You really need to know how to navigate your way to find where the opportunities are. And that is different than in the commercial marketplace. So just because you may have been good and successful in the commercial market does not equate to success here. So you need to know how to navigate the capture business development environment and within government contracting. So my first recommendation, outside of forming a good team of service providers around you is get a business development coach and have them help you designate who your buyer is, what exactly it is that you provide, and who is going to want that, because those are the relationships you want to build first. You don't want to be just hunting and pecking online trying to figure out where the next contract opportunity is. That's not good business. Good business comes from recognizing who it is exactly that wants what you've got and how often are they purchasing that. This is an evergreen market. There's lots of money to be had, but there's also lots to know. And so you curve that or bridge that gap with education and quality information and building your acumen by learning and understanding what you do may not apply across the board. So find who those buyers are directly, form a relationship with them, and then start marketing yourself in a positive way.
Hey, Ron, so M2203, you notice I'm beating the drum here, right? Equity and procurement memo says in Management Action 1 that we're going to increase the small disadvantaged business goal. Well, part of the way we're going to do it is through the 8A program, and I can go through the Brothy case and why there's only one certification, so on and so forth. But for those who are 8As, they're going to see a lot of activity, right? Because we got a higher goal and we have to negotiate that goal with SBA. So Ron, what if there's a new business and they're saying, hey, you know what? I should just be 8A. That's the way for me to start. What would you say to them? And what are you saying to new businesses who say they want to be in the 8A program? I want to make a little twist on your question.
Well, you got to be ready. It's you can have a desire to do anything. I mean, I'd like to be taller and thinner, but that's not going to happen. And so so you've got to be realistic in what it is you can and can't do. So if to get in the 8A program, you have to, I mean, there's rules. 2 years in business, you have to have inclining revenues, and you have to have the potential for success. So those are some big things you've got to be able to hurdle through. And so when you go to do these things, desire isn't enough. You have to actually have these things in place. So if you're brand new, and there's going to be a lot of people say, hey, I just started, I'm a year old, do I have to wait 2 years? Well, you can ask for a waiver. You can do that. I mean, if you're the inventor of Kevlar or a technology that no one else has, the 8A program is going to say, oh, no, you qualify. You can skip the line because of these reasons. You're the professor, you're the inventor, you're the mastermind. But when you're going to get into the 8A program, you still have to get certifications. Now, it's a lot easier than it was 20 years ago. 20 years ago, it was a banker's box of volumes and volumes of paper that you had to mail in FedEx, and you had 7 days to respond. It was
yeah, I'm gonna need like 3.
It took forever to get that stuff done. So, but now it's an online application. They've had people in the past get certified in less than 30 days. Got to have your ducks in a row and you got to be ready to do it. But it's one of those things that can be done. So if you want to get in the 8A program, be prepared to get in the 8A program. Talk to somebody who's been in the 8A program. There's going to be good stories and there's going to be bad stories. Plain and simple, just like in anything else in your world, there's those that have succeeded and those that haven't. Obviously, you want to get both sides, but you're going to want to make sure that you hear the success stories because that's what you're looking for. So make sure that you do your homework. We have a couple events each year. Each of these organizations we go to the HubZone councils, we go to WIPs, we go to the Challenge Her events. There's a presence there of people that have been in the 8A program and are in the 8A program that can help guide that. And we don't see us as competitors. There's 5,000 certified 8As in the United States, 28 million registered small businesses. It's a unique group that you've got to be in. Not everybody's going to get in, but that doesn't mean you're not going to be able to partner with an 8A. 8As can partner with 8As. HubZones can partner with HubZones. And you got women-owned partner with women-owned. You got veterans partnering with veterans. So there's ways to do these things to get yourself noticed and get yourself a portion of this work. But there's a lot of work coming. The infrastructure bill has got $1 trillion in it. Do the math on that one. It's incredible. There's not enough small businesses, good qualified small businesses, to do all this work. And the only way that's going to happen is teaming together. think about the construction piece of it and the amount of bonding capacity you have to have. It's in the hundreds of millions of dollars. You're going to have partners for this. The mentor protege is going to be key. You're going to partner with these large companies, and they're going to be able to go after these contracts, and they're going to help you grow exponentially. Now, there's hurdles to that as well. In the mentor protege program, it's like a marriage. I mean, your partner, if you don't have a good partner, can bankrupt you, and that will affect your home life. I guarantee it. So there's a lot that's coming with this. So if you're looking at the 8A program, do your homework before you jump in, because it's a 9-year timeline. If you're already in the 8A program, you're not having successes, partner with 8As that are being successful. If you're graduating 8A from the program and you're successful, mentor a new 8A. It's, reach out, make these things happen. All of this is available. You have everybody's data. You just have to do a little bit of homework to do it. And everybody can participate. I mean, it's the 8A might be the prime, but it can have hundreds of subcontractors. I mean, take a construction project. I mean, there's hundreds of disciplines when you go to do all these things. So the 8A program is going to be key, and it has an increase in the funding. Doesn't necessarily need to be one right here, right now, but you should get to know a 8A company. You should get to know a veteran-owned company. All these things plug into and play together.
While we're looking at reducing barriers and constraints that are put on the small businesses in your areas of subject matter experts, have you heard any pitfalls from the industry, such as 8A, veteran-owned, women-owned, and any of the social economic groups that will lead you to believe that there's biases there? Can we have a further discussion on that? Because I think that's really good to be able to be aware of what those are.
You want to start, Candace?
Yeah, I'll take it. So I'll take it from this perspective. WOSB and the WOSB Federal Contracting Program is kind of the new kid on the block. So because of that, I have a strong belief that contracting officers utilize what they feel most comfortable with. So that is your 8A program, some of your HubZone program. And so we have a real concerted effort and allegiance to help contracting officers understand the WOSB program, understand the set-asides, understand that awarding WOSB contracts is not as mammoth, right? Such a behemoth as people may think. So I kind of turn the lemonade, right? The lemons into lemonade. And sometimes, you've got to do it with some sugar on the side. So I don't do it with finger pointing. I do it with, this is an opportunity for us to grow together, because you have a goal, you meaning the agencies, and we want to help you reach those goals. And we have WOSBs, EDWOSBs across literally the gamut of NAICS codes who are ready, willing, and able to provide those products or services. So I wouldn't say it's necessarily a bias as much as it's unknown territory and an opportunity for us to learn together, support each other, so that we can not reach those goals, but exceed those goals.
Absolutely. And here I'll put my other hat on in representing the HubZone Council. I was speaking with the executive director, Michelle Burnett, the other day, and we were talking about how do you get a seat at the table? And a lot of it is getting written in to those set-asides. A lot of set-aside goals were put in place prior to HubZone even being, or woman-owned even being at the table yet. And so the HubZone Contractors National Council advocates legislatively to get HubZone businesses a seat at the table, just like the veteran-owned businesses and the women-owned businesses, so that they are considered for those set-asides. And to go a bit further, it is being able to compete then. It's not so much just getting a seat at the table, but you have to be able to prove your ability to perform, show your past performance, and prove your ability to financially fulfill the obligations of the contract. So there's a lot that goes into play. And so organizing or getting involved in an organized group that supports whatever the designation is that you are going after, especially from a HubZone perspective, you're supporting an underserved community. You're providing jobs within that community. So it goes several layers deep with the amount of access that you're providing once you get that seat at the table. So it's extremely important for your past performance and your financial capability to be in set lockstep with you as you get there, so that you perform and you stay at that high level, because your impact is deep in that community. And I think the way things are written are subject to interpretation. And so HubZone Council does a great job with getting HubZone businesses a seat at that table, and WIP does the same for women businesses. And I'm sure VIP, I'm looking forward to talking to Barbara later. I'm sure VIP does the same for advocacy for veteran-owned businesses. But once you get the seat at the table, you really need to show your ability to perform.
Excuse me. I had a question and I had a cough. I'm safe though, don't worry about it. Those who are online are like, that's why I didn't come. Well, you know, it's fascinating. A lot of times we don't realize that most of the barriers that we see is just awareness, right? Right? I've had people in the government ask me, hey, what's a HubZone? And I'm like, what? Like trained CORs, trained PMs that are asking me this question. How will we ever make a HubZone goal if you have no clue what the program is? But then when I tell them, they're like, oh my goodness, why didn't anybody tell me about this? This is a true story. I'm not making this up. But it goes to that idea of awareness, and that creates
If I could follow up on what Candace said, you had said, get to know your industry better than anyone else.
Yeah.
That goes deep. That goes to, when she says anyone else, that means the contracting officer. If you have a capability, then you better know how that agency needs you, right?
Absolutely.
How are they going to buy from you? Okay, what certifications perhaps do you have? What contract vehicles can they buy from you on? What do you have that allows them, if they decide that you are the solution, how do they award the contract to you? And so getting back to your HubZone example, I mean, you're going to have to be armed. The truth is, with not only what your differentiators, know your industry, what you bring to the table, what's your differentiator, but you may also have to be able to know more about your certification than anybody else.
Absolutely.
And you know, we actually, for WSBs, we arm our members with just that. We literally give our members a one-pager that teaches them about how to set aside, how to do sole source, so that when they are talking to the contracting officer, they can tell the contracting officer, right? So helping someone help you and doing it in a way that's non-combative, but that it's helping. But we literally know that, because so many times, just like you said, Calvin, people say, well, you know, I hear the WSB program, but I don't know how to implement that, or the best way to set aside. Or so, hey, you know what? Thank you for sharing that you didn't know, but here's how you do it.
Let me help you.
Yeah, we make our WSB members armed and dangerous with information.
And I know the HubZone does as well, and I know Ron does at the 8A, right, Ron? Ron. Uh-oh. He said he was at Virginia Beach. Tides up, I don't know, surfs up, I don't know.
Stop.
Where is he?
There he is.
He's still here.
Ron, what would you say to this question of barriers and pitfalls? What would you say to overcome those things?
You know, the barriers and this part just pisses me off about when the small business piece, right? If it's small business, now think about it. Nike was started in the back of a station wagon. Apple was started in somebody's garage. And these were small businesses. And when you go out and compete with the large primes, they were started someplace. They started with one person, two people maybe. And so when they say, well, a small business can't do it, so only IBM could do it, or only, one of these monster companies can do it. Oh, that just irritates the shit out of me. Can we say that online? Probably a little late now for that.
I think we just.
But
We got closed captioning too, Rod, just so you know.
yeah, because so it's one of those things that, as a small business, you've got to be good at what you do. You got to be better than they are. I mean, I can't tell you what we all do is we educate people. When we go to these certain KOs and they go, I haven't heard of the 8A program. I haven't heard of the Hub Zone program. I haven't heard of the Women-Owned program. And a lot of times it's absolutely education. Because they graduate, I mean, they don't graduate, they move on to other jobs. There's brand new contracting officers just wet behind the ears that can't even spell 8A. And so it's one of those things where you have to, you're continuously educating people on this. But once you get them educated on it, and they find out that this is the best way to get this done, and these small businesses are passionate and they are nice people, they don't go anywhere else. I mean, that's plain and simple. They stay in this program. So it's, going back to, I mean, I'll deviate for a second. There's 132 pages of new rules the SBA just put out. You have to have comments by November 8th, 132 pages. And I've read all 132 pages. Boy, is that boring. But there's a lot of good rule changes coming for small businesses. There's some other stuff that makes it easier to partner, easy to team. If you're having a hard time sleeping at night, go read those. But there's a lot of things that they're going to be there to help small business. Educate yourself on these new rules to help you. Don't rely on somebody else with the old rules. I can imagine in the Hub Zone portion of it, where people don't realize that if you used to live in a Hub Zone, if you move out of the Hub Zone, your Hub Zone company still qualifies. Military bases are Hub Zones. Tribal entities on reservations are Hub Zones. There's a lot of the stuff people don't know. So educate yourselves on these so you can take advantage of those. Don't let somebody say, well, you're a small business, so you're not sophisticated enough and you can't do it, and you're not IBM. Don't take that as an answer. And if you do, you sick whip on them, because who wants a bunch of angry women after you, right?
Thank you for that, Ron.
And so, Ron, thank you. While I'm going through this thought, I think we have a question over here. So I always tell small businesses that you have to advocate for yourself, right? Now, me and team are gonna advocate for you. We're gonna go to bat for you, but you gotta be able to advocate for yourself. And one of those ways is not only letting them know how you are technically superior in whatever way that is and what that differentiator is, but also how can they get to you, right? Because what often might happen is you might be speaking to a program official and they're like, oh man, great. Let's go women-owned small business. That sounds great. And then they say, okay, I'm gonna send a package to procurement. You've lost that opportunity. Exactly. You've lost that opportunity, right? Now, if there is another method, let's say you're on an existing contract. Let's say you're on GSA schedule. You can say, hey, I'm on GSA schedule. You only need 3 women-owned small businesses to run a competition. And if you give procurement this package and my name and some other companies, they're gonna do it. Why? Because it's easy, right? Let's be honest. There's a lot of paperwork. People are overworked. Easy is good. So you wanna be able to educate your customer. Not assume they know what the Hub Zone is, or the price preference, or if they know what the service disabled program is, or if they know what the women-owned small business, right? And just as a way of a reminder, the 5%, the 3%, these are all arbitrary numbers. They're not rooted in any kind of mathematical algorithm or anything like that. So the agencies are really working hard to meet these goals, but also realize, they could be, they're really arbitrary. So it really goes back to even informing the customer. Hey, there's a 5% goal. I always say, leave them also with the impact. What is gonna happen with this contract to a Hub Zone, all right? Where 35% of the folks gotta be in Hub Zones, right? That's a big impact. right? I think of my small town of Cambridge, Maryland, that's a 35 people, 35, like 35%, that's a lot. That's a big impact, right? That's more dollars in an area that could really use it. So it's always good, and I appreciate everybody saying that, to educate the customer.
Yeah.
We got a question in the audience. So, sir.
Yes, you mentioned about lots of activities for 8As and hub zones. Is there a plan for an increase of set aside for?
Ooh, that's a good question. So for those who didn't hear, we talked about the increase through M22 for the small disadvantaged business goal. And the question was, are there other socioeconomic categories that are also looking to be increased? The answer is, I've seen legislation to say yes, but I'll leave it to Candace and the others to respond.
Yeah, actually, we advocated for an increase. One of the good things about WIP, as I started with, we are the leading voice on Capitol Hill for women-owned businesses, the 12.9 million. However, I don't go alone. I take on my shoulders my veteran friends, my hub zone friends, my 8A friends. So if I am at a table advocating for an increase for my socioeconomic class, I am going to advocate for my friends as well. So right now there is some legislation where hub zone, there will be an increase in hub zone, an increase in veterans, an increase in women-owned, and an increase in 8A on the table right now. So for instance, I'll use the women-owned because clearly that's my space. But it's 5% right now, and the plan is up to 7% by 2024. Hub zone is at 3, it's going up to 4, though I'll be really honest and transparent. Hopefully I don't get kicked for this. I asked for 5% for hub zone of veterans, to be honest with you, right? Because I really believe, when I say I mean WIP, really believes in equality, equity, and parity, right? Equality, equity, and parity for opportunities, resources, and knowledge. And so you'll see some of those conversations occurring, but there is policy on the table right now for increase.
And that unified voice is impactful. When they stand together and advocate for one another, it's impactful. But there is some ownership on the businesses that have these designations as well to represent themselves in the marketplace. So the KOs know who you are. So the agencies know who you are. Just because you get the certification, he's not getting a ding in his email saying, ABC company just got their hub zone certification. It doesn't work that way. You have to market yourself in the community so people not only know what your proficiencies are, your capabilities are, but that you're representing that designation so that when they have an allocation for a hub zone, for a woman-owned, for a veteran-owned, that they know who you are, that you're on the table. You have to advocate for yourself. You have to be marketing and doing market research and getting the word out and spreading the word on your own, who you are and why you represent what you do well, and lead with your capabilities, not just your designation. HubZone does a great job at the annual conference. They do a pitch contest, and they have prime directors of small business who sit up there and give critiques of what the pitch is. And what I hear every year that resonates with me and that I in turn share with the businesses that I work with is, don't lead with your certification. Lead with your capabilities and why that should matter to that agency or to that prime. You've got to learn about them. What's their mission? And how can you, standing before them, tell them, this is what I do well to support that mission so that they're listening, and then follow with and to compound on top of that, I have this certification that makes you even more attractive in it. So you really have to be empowered with good information and know what the mission is and how you fit into that role in order to get them to pay attention to you. So don't lead with a certification, but it is certainly important.
We talked a little bit about, and I appreciate that question, this idea of growth. And what are we telling women-owned small business, hub-zone small business, veteran-owned small businesses, and 8A businesses about growth? How do you start this business plan? How do you strategize? Or how do you set these objectives to how you want to grow, right? Because that we talked about that in the last panel, right? We know the bankers want to see that. We know they want to see balance sheets, of course, right? They want to see the financials, but they also want to see how we're going to grow. And we know that there's opportunities here. I'm going to start with you, Barbara, because I know you train very vigorously on that with the veterans. Why don't we talk a little bit about that?
Well, it starts with your infrastructure. You can have a dream and a plan, but if you actually don't have the infrastructure, if you take a building, it can't take the second and third floor if you don't have the foundation for that growth. So we teach from the very beginning to build a foundation for growth, and that's your infrastructure of your operation, your controls, internal controls, your financials, right? So, it is often, you hear it said, times your best day and your worst day is when you win. Well, we want to mitigate that. And the reason why it's your worst day oftentimes is because you don't have the infrastructure, you don't have the financing in place, you don't have the certifications, the systems to manage that impact to your company. So how do you grow first before you even, there's a whole business development pipeline, business development, capture strategy, proposal, that whole marketing, to compete. But I think we had one of our founders of VIP, Barry Kane, a very successful business owner, used to teach my favorite class, which was really the last big briefing. And it was all about program controls. And he referred to it as winning work is, and if you don't have operation and program controls, it's like a leaky bucket. You put it in, a new win, and it comes out the bottom. So growth really comes from, doing the first contract, whether it's up, really well. And if you think about it, we're all buyers. We all buy some things. If you had a really great experience at the particular vendor, you want more of them. It's a human environment out there. So how we teach it is, be able to take that growth, because the customer, I think you can vouch for that, is to do more business with you. They will. But you better be ready. and that means having the infrastructure in your company to take that weight. So that's what we teach. But it's again, I said it in the very beginning, there's no new in business. That has been true from day one in business. Can you take the growth, and what does that mean, and how do you get ready for that growth? So first you have to build it the way that will sustain your company for that growth. And of course, it's always better to go deep first. So here, you get a wonderful opportunity to support the Department of Education, do a great job, and then find out what else you can do for them. You've got to, it's a lot easier, it's a great referral. Go deep first before you go wide.
I think one thing that I want to add on, very good points. When you do receive a contract, make sure you are actively engaging your customer, right? Don't wait for them to set up a kickoff and all. Be active, be on it, because that is the first experience that they're going to get. And sometimes I've heard customers come and say, oh man, it's not working out. Why isn't it working out? Well, they're not communicating. Well, did you communicate with them? No. So why don't you reach out to them? Did you have a kickoff meeting? No. Did you have a meeting to discuss the scope of work? No. So they're just supposed to be like a mind reader and know what you need and just translate that into the work. Yeah, basically, no, it doesn't work that way, right? So always be engaged in your customer, right? you cannot be annoying in federal contracting. Well, I guess you could, but it's really important to be engaged, right? And to take that, and that communication is going to be awesome, because what else you're going to get is when they're having problems, right? And as soon as you get that dialogue and you build that relationship, oh man, Calvin, I'm really having a problem with this other requirement. I don't know what to do. I'm not sure what I should do. Hey, you know what? Maybe you should do a woman-owned small business set aside. I'm here already. You know what, Calvin, you're right. You'd be surprised at how much that does happen. Because again, at the end of the day, it is relationship based.
But I think it's beautiful that you bring that to the point with business leaders that are watching, or those of you that are here that are new to the game. They don't know the rules of engagement. They don't know that they can talk to you.
Right.
So that's why I think you guys are doing a great job of opening up that avenue of communication and saying, yes, you can. You can communicate with me. Now, there are times where you're not going to get the information that you'll get at different times in the process. But ask questions. Don't be afraid to not know everything. I think being vulnerable and asking questions, and you don't make that mistake again. But from a financing perspective, my day job, I support lots of organizations, of course, but my day job is helping fund growth. And while I love it when a client calls me and tells me, I've just won a contract award, now I need money, that makes me happy for you. But it is better when you call me during RFP or even RFI, so we can chart a plan together of what you're going to need for that opportunity. So when you are going to RFP, you can come to it and say, I have a letter of financial capability from my financial partner that says, if on the event I win this award, I can financially perform at every level, no matter how long the contract goes. And so engage with your financial partners often and early. The earlier, the better. It is not a waste of my time to talk to you before you have a contract award, because we can build a plan together so that when that award happens, or even if it doesn't, we know what's going to be in place. So then it's turnkey. So then you can get the funding in the amount of time. We call it just in time. You can get it just in time. But if you come to me at the 11th hour, you might be scrambling a little bit. And even though we'll do our best, it is going to be predicated on how quickly you put some forms together and documentation together. And so open dialogue across the board with your KO, with your agencies, with your partners, with your financial support, your lenders. They have to know where you are at all times so that they can support you at all times.
Absolutely. Thank you. Yeah.
Yeah, I'm always really nervous when someone tells me they won and they haven't put that in place. Like, first thing I always say, does your banker know? Does your banker know that you won? Please, because they should have known that they should know your pipeline, because your pipeline is a multi-year plan, and all the bankers here, all the financials, and I know Teresa yourself will sit down and do a multi-year plan on your financials, and that is that infrastructure that has to be in place. Absolutely.
You know, one thing I do want to highlight too, that in federal contracting, there's this weird phenomena, and you guys know, I've been a specialist, I've been a contracting officer, I've been a director of contracting, I've been all over the place, and now I'm in the small business arena. When you don't do well on the performance of the contract, it usually comes from the financial part of it, right? And when you start to not be able to perform, and let's say you're a HUBZone, I'll pick on a HUBZone, right? Let's say you're a HUBZone. For some reason, the program officer always says, now I'm not going to use any HUBZone at all because of this issue, which is very weird, right? Because there's so many large integrators that we use that default all the time, and we just keep going back to them.
That's because everyone's human, right?
Right. But for whatever reason it is, right? We had an issue not too long ago, and the guy was like, well, I don't know if I want to use the 8A program. I'm like,
Well,
did you have one problem?
Well, that can also go to, profiling. I'm not going to use a woman again. I'm not going to use a veteran again. Right?
Yeah.
It's the same thing, so it hurts the whole community.
So that's why it's even
or a
more.
small. It can just say, I'll never use another small.
You know what? We've
Because you
heard
could
that
have,
too.
because you could have advocated to get that set aside
Right.
or pulled apart and, that contractor goes never again.
Yeah. And
It
so
hurts the whole
it
community.
hurts the whole community. And I say that not to scare you, but for you to make sure that you're really tight and that you're using these resources and you're really investing and making sure that not only can you win the contract, capture the contract, but can you also make sure that performance is sustainable, because it won't just hurt you. It'll hurt the whole industry. So I just wanted to make that comment. Ryan, did you have anything you wanted to add?
No.
Okay. Gabby, do we have any questions online?
So we do have some ed-specific questions that I thought I would save in case we had extra time, but there was a question about SBA-backed loans and lines of credit. I don't know if anyone happens to have an answer for this, but if someone could overview the types of credit available to small business.
Yes. Okay, so fundamentals. The SBA doesn't do direct lending. The SBA is the guarantor of loans made by others. In personal finance, the analogy would be a cosigner, right? That's what the SBA does. For the guaranteed loans, the two large programs are the 7A loan program, a maximum of $5 million, maximum term of 10 years. Then there's the 504 program, which can be 10, 20, or 30 years, depending on the project. The 504 program is for fixed assets. Usually it's for property, real property, used for a business that wants to buy a building property to put its offices in there, manufacturing facility, distribution facility, warehouse, whatever, all right? That is a loan that's made partly by a bank, and then part of the loan is done by a certified development company. So it's actually two loans in one. You can use the 7A for property. You can make a 7A into a line of credit. So there are those options there. Now, going smaller, I mentioned them earlier, it's Community Advantage done through CDFIs. That maximum, it's a guaranteed loan, that maximum is $350,000. Some CDFIs are authorized by us to do credit lines with Community Advantage. Not all of them are. It depends on the expertise of the CDFI in doing these. So not all of them can. You should shop around if you're looking for that. Then going even smaller, there are the non-guaranteed microloans. That's anything up to $50,000, right? Generally, we don't do those as, rather the nonprofits that do those microloans don't do them as lines of credit. They just do them as a straight term loan, but they could be very short-term working capital for someone just getting started out, 15,000, 20,000, something like that. So that's the SBA financing. Because it's not a direct loan, you should get in touch with the lenders directly. Begin with wherever you're doing your business banking, right? They know something about you. Hopefully they know a little bit about you, right? You've been talking to them. And then after that, you could be banking at BB&T and go get your 7A loan from M&T, right? It all depends on who's willing to do business with you. Does that cover it? Okay. Oh, one other thing I didn't get to mention, sorry. For general contractors and construction, we have a surety bond program. It functions similar to the lending program in that we, the SBA, guarantee the surety bond to the surety bond agent, right? We're going to backstop them in case they need to pay out on this thing. So it helps those smaller contractors if you're unable to get a surety bond on your own because your firm is not financially strong enough yet. So you can email me about that. I'll talk your ear off about it if you want.
In our world, and I know Isaac can speak to it as well, there's traditional forms of capital that you get from your bank, and then there's alternatives. I would say, obviously, you have a banking relationship. When you open up your business, you open up your operating account. Hopefully, you're doing it with a bank that understands government contracting. But if your bank isn't able to provide you with financing, ask them who their alternative partners are. Because if they say they don't have any, go find another bank. Because true government contract banking institutions that understand what it's like to be a federal contractor will have alternative partners that can provide you with funding while you can't get funding from the bank. The bank, that's the ultimate goal, right? That's the cheapest form of capital, is to get it from your bank. But when you're not able to procure it, keep it, or increase it, they should have an alternative lender that they can refer you to, or two or three, and you vet them for yourselves. You're going to pick the person that you vibe with the most. And so make sure that if your banker can't provide you with an alternative partner, go find another banker.
A question in the audience? Oh, Sheila.
Hi. Yes, I know the question was about SBA. And just to say, everyone's been saying a shameless plug. M&T is one of the top 10 SBA lenders. But some of the products that are provided with SBA, in partnership with SBA, include specializing in 7A loans and other loan packages for startup businesses, business acquisition, as well as real estate purchases, equipment purchases, and permanent working capital. So there are other areas, and I agree, if an institution does not provide the services that you actually need, ask them, who do you recommend always?
Do we have time for one more online question or in the room? We have one more online question before we close. The timer.
Nope, I think that those are all the ones that are good for the panel. Thanks.
All right. Yeah.
Well, alternative lenders, that makes it more flexible. So we're not looking at it from terms of your, personal capabilities or your business capabilities either. Isaac spoke to it in the last panel. Your government contract is guaranteed to be paid. So that's the collateral that you utilize for that. So in most cases, with most alternative lenders, they're not looking at that for any other reason. If they do, it is just to gauge where you are and where you need to be and how we can fill that gap in for you. But it's not a determinant of whether or not you qualify for the alternative loan. But in banking situations, it is different. I'll let the bankers here answer to that.
Business Equifax is used, as well as Dun and Bradstreet, just for, a reference point, just to make sure there's no outstanding liens or judgments or something that the banker is not aware of. So it's just more so as part of the research package. Alternative lenders I use Business Equifax in my role now, just to take a look. We at the point where we give you a break on credit, we do risk-based pricing. So your credit score is pulled, and that is going to have something to do with your risk-based pricing. However, it doesn't determine whether we're going to give you the loan or not. And we do fact check. It's just important for us to know where we are in the debt stack. If there's someone with a senior lien to us, we want to know who they are.
Sean, you got it.
Yes, so it's going to be a combination of both. It's going to be looking at your business credit, looking at any liens that might be associated with the business, et cetera. But then there definitely during the startup phase, your personal credit is going to be looked at as a history source of how you utilize funds. Definitely, if there's no historical performance on the business, there's going to be a reliance on that data. So typically, a bank or a financial institution is going to have some type of minimum requirement. So, for instance, M&T, it's 680 is the minimum requirement for a personal credit score for looking at financing. Did that answer the question?
Yeah. Yeah, and I can add on that. Just it is important, back to like telling your story, because a lot of times, yeah, people are very wary of that. We get that question asked a lot, like, Isaac, are you guys gonna check my personal, guarantee, like my personal assets? Like, there's a story behind why it's not where it should be, or like business credit, and we understand that. So, like in our, like to what Teresa was pointing out, you ask a banker what are some other alternative sources to help build that, credit back up, so then you can re-engage with your banker. So, for in our space, like we don't have a personal guarantee on our financing because it's all leveraged from the contract that you're going after and winning. So a little more flexible with that. Of course, back to Sue's point, we do want to see the debt stack, and we want to make sure like there aren't any other loans out there that could prohibit us from financing the company. But again, it's just important to come full of all your cards in front of you. Like, so you're not lying, you're not hiding anything. Like, this is my business, this is my credit, what is available for me right now, and what could be available as I continue to grow. So it's just, just be honest with that. And that's what every financial institution appreciates. It's honesty. If you're just honest, that's at least square one, and then we can build from there. Oh, yeah. It- Yeah, being in this space, if we're not knowing outside of our own financial box, we're not doing them a service. 'Cause there's so many avenues you want to take them and like build relationships. And this panel is making a great point. Like you want to know who's going to help you grow outside of the one value that they have to add. So yeah, 100%. Like in that direct like relationship you have with your financial institutions, like you'll alongside, they're helping you get in the right direction and grow all of those assets up till you can move for the next step. So you're totally right there.
So this is going to conclude this panel and our session. So I want to thank Candace, I want to thank Teresa, Barbara, and my good friend Ron. Please give them a hand. I want to thank my first panel as well for being here. Hopefully this is something that was very helpful and you walk away feeling more empowered to do more business with the federal government. And hopefully we reduced any barriers that you might have walked in with. And you know how to navigate the marketplace a little more effectively. Again, many thanks to my team for putting this together. Thank you for all those who are in the room, but also those who are online. Looking forward to many more events. This will probably be our only hybrid event for the day for this year. But we will probably look to do other events in the future, probably not this year, but probably in the future as the world starts to open up a little bit. But again, thank you so much for being here. Thank you for your participation. And thank you, everyone, and have a great day.
Thank you.
For the donuts, whoever brought them, and the coffee.
Sue.
Sue, thank you, Sue.
Please take a donut with you.
Thank you for having